India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a fresh new week. It's a big one. It's the budget week. It's a long week as well. 1st of February is the budget, which is, of course, a Saturday. I'm Prashant. With me, my colleague Nigel, and Surabhi should be with us in just a bit. Nigel, morning.
Well, morning, Prashant. I think it's going to be a very, very big week. Action is required on ground, and I believe that we'll hear something on that front. And don't second guess what Mr. Trump is going to do next. Colombia is his first target. Let's see how things pan out from here on.
Absolutely. And, is enough and more lined up, right? So actually what we'll do is typically we'd start with a little bit of the last close, etc. But I'll just dive straight into what is ahead. So the graphics will start to come up, and as I said, it's a big week with lots of action and activity really out there. So Fed decision is there. There's the budget, the union budget, which is on Saturday. And then there is mega cap US earnings as well. So just one by one for a quick bit. So Fed decision on Wednesday, the first up. And we'll react to it as always on Thursday morning. The Fed is seen holding interest rates. Will we hear and see something new from the Fed? We don't know. But it's possible that, we, in that press conference, Chair Powell says something. Remember, Trump has recently said that he'll speak to Powell at an appropriate time, etc. So, something to watch out for. But prima facie, expected to be like a status quo, nothing meeting. Mega caps in the US report earnings, and this is very important. About 40% of S&P's market cap is reporting earnings. I'm just highlighting the big tech names: Tesla, Microsoft, Meta, which report on Wednesday, and Apple, which reports on Thursday, has got the potential one way or the other to change the mood out there. Chinese local markets are shut. And again, because there's been so much focus on China, from the point of view that, Trump is not going all out with big tariffs on China, it's more negotiation, etc. But the local markets will be shut from the 28th, which is tomorrow, to the 3rd of February, which this is the Chinese New Year, the year of the snake. Well, many will argue it's the year of Trump. But anyway, this is another one. On the 1st of February, as has been advertised by President Trump, Mexico and Canada are at the risk of tariffs from the 1st, that is Saturday. And of course, there is the union budget on Saturday as well. We are trading. We are live in terms of market activity, market action. The question, of course, is will the government try and arrest a bit of a cyclical slowdown, at the same time maintaining macroeconomic stability, the fisc, etc. So these are a couple of points. Now, just to rewind and look at the trades on Friday, nothing very much. Nasdaq was down about 0.5%. Dollar index was down 0.5, 0.6%. But that we knew while we were trading in Asia on Friday, that the dollar was lower on the back of, those comments with regards to Trump and China, that he's willing to he's had a good discussion with President Xi in China, and et cetera, et cetera. So markets have taken it. By the way, the CNH, the Chinese currency, is up 0.5, 0.6% against the dollar. And of course, gold prices are up about 0.6% on Friday as well. Now, just the levels to circle around quickly. The Nifty had a down session, but we did not, and the reason we had that is because we could not break out and take out the highs of 23,426, which is nothing but the swing high that we've been talking and putting on the table for a while. So on the downside, the level is 22,976. That is a swing low that we are working with. We left off at about just near 23,100. So these are very near-term levels in that sense. Now, the daily Bollinger Band, if the lower level, the recent swing low breaks, is 22,820. That is the next number. Bank Nifty has not yet broken the swing low of 48,074. The Nifty actually once did that. The Nifty Bank has not. And I think that first comes into view, but very close by. Here, the high is 48,892. Which is the swing high, similarly like for the Nifty. And the 20-day moving average for the Nifty Bank comes in at about 49,530, which these will be the resistance levels on the way up. I think, the GIFT Nifty will give you a sense of how we're likely to start. But I think more than that, there are many stocks which we want to talk about with, because of earnings, because of broker initiations, because of other things, news flow, etc., which should be in focus. 170 points lower again, going into a big week like this. I mean, I think that's deep, and there's a deep cut. And if we break below those lows of the swing low that we put out on the Nifty, and it looks like with this kind of an open, you'll be around there. I mean, I think then you'll have to consider even lower levels. But will it hold once we've defended those levels? Will we be able to do it once again as we start this Monday and this week? That's the question. Surbhi.
Prashant, hi, morning. I reckon this has something to do with all the kind of rhetoric and statements that are coming out from the US president. If you look at US futures, by the way, they're down rather sharply, and they're absolutely in sync with what the implied open is suggesting. US futures now are down anywhere between 0.5% to as much as 1.7% on the NASDAQ futures. So it's a sharp, declining start that the US market seems to be penciling in. Asia this morning, many markets are actually already shut. I'll come to the trades in just a bit. But let's talk about, so the Hong Kong market is open, but several are shut. Let's talk about these cues. So, what could be the market jittery about? Talk of more retaliatory action on tariffs and some hard talk. Let's pull up the quotes. What do we know in the last couple of hours? The US president has threatened retaliatory action on Colombia. Not threatened, he's saying he's going to do it. Why? Because Colombia didn't allow that plane to land with the deported immigrants coming in from the US, the defense plane that was coming in from the States. And now he's talking about 25% tariffs on Colombia. But that's not all. In general, the commentary in the last couple of hours has been, more of the same, but very, very hawkish, you can say. He was speaking to, BBC journalists on aboard Air Force One. What did he say on Greenland? Again, reiterating, saying, I think we are going to have it. He was talking about why Greenland needs to be an integral part of US territory. He again reiterated his stance on Canada. He said that in terms of trading partners, Canada is, more than 90% of their trade is with the US, whereas it's the reverse with the US, and it's an insignificant country from a trade standpoint, US-Canada. So he says, I don't want to spend hundreds of billions of dollars supporting country unless that country is a state. And if it's a state, the people of Canada would pay much lower tax. So the geopolitical rhetoric is still going very, very strong. Plus, he's following the rhetoric with actions, for instance, on Colombia this morning. And maybe the market is a little nervous about what lies ahead. Anyway, now that brings us to the Asian picture. Asian markets have been trading mixed. Like I said, many are closed. South Korea's closed. Australia's closed for regional holidays. Even Taiwan, I think, is closed this morning. The ones that are trading, Japan is down. The Hong Kong market is slightly higher. Lots of data out of China this morning. It's a little mixed. On the factory activity, there's actually contraction, surprising contraction. That was not what was expected. This is the official PMI data that came out this morning, and the number has slipped below 50. But on the other bit, the industrial profits, there is improvement, because the figure for December is showing 11% increase versus last couple of months where things were pretty challenging for China. So mixed data on China. Let's talk about what cues here tell us. Obviously, we've been in a very range-bound consolidation week. The low of the week is something I'll watch to begin with. Now, with this kind of, these kind of cues coming in the morning, let's see. Last week's low was 29,976, and we managed to recover a little bit from there. Let's see if the bulls can hold on to that. All hopes, obviously, are going to be on the budget. If there's some kind of a magic bullet that maybe the finance minister can fire. Not much positivity to report in terms of the flows picture, but the intensity of selling was a little less on Friday, you can say that. Selling of about 2,760 odd crores, domestic institutions buying about 2,400 odd crores. The total selling in January has now crossed 60,000 crores, 64,156 to be precise. The last big number was 94,000 crores of selling, which happened back in November. Anyway, lots of individual stock reactions and action to track today. And we'll go over these stocks as we go along. And it's a very mixed picture. For ICICI Bank, the margins are steady. The gross NPA level is steady. But if you want to be a nitpicker, you'll say that the slippages are increasing, and you'll watch for that. There's a 20% rise quarter on quarter in slippages. JSW Steel, of course, has been a pretty strong showing. We'll discuss more with Nigel in just a bit. IDFC First Bank, what I noted was that even there's a very sharp rise in slippages because of the MFI portfolio. Let's see how the market's going to read that in. Godrej Consumer, weak as expected. There's pressure on margins that's showing up year on year. NTPC is a mixed bag. The two good numbers are actually DLF, very strong showing in the third quarter. So maybe we'll see some green on these stocks. And Bank of India has seen an improvement in asset quality. Lots of individual stocks that we'll track. But the overarching, starting point this morning is fairly challenging, Nigel.
Well, that's right. And just going by the implied opening that you were talking about, 170, 180 points down, and just going by the price action, going by the way India has underperformed, I would lean to the side that we protect the 22,900 mark and we end off the lows to today. And I say that because we have two very, very important events in the next 10 days or so. One is the budget at the end of this week, that's on February 1st, and then you have the RBI meet and the policy decision out there. And all the indicators you're getting is calling for attention. And I'm sure the regulators are looking at this as well. And I'm expecting some kind of liquidity easing from the RBI and nothing negative from an economy, from a stock market perspective in budget 2025. So I'm expecting that today, if the GIFT Nifty is suggesting 180, 200 point downtick, we should end off the lows. Let's tell you about what the FIs did. Actually, they covered some shorts, but it didn't result in any big price action. 10,000 contracts were down. They added close to 7,000 contracts. And if you look at, pull up a chart, you'll see that from around 3.5 lakh contracts on the short side, the FI net short positions have come down to around 3.1 lakh contracts. So there have been actually some shorts that have covered out, but the price action really hasn't been visible. The FIs, well, they are on opposite ends of the spectrum, 3.1 lakh contracts, on the short side, while the clients are around 3 lakh contracts on the long side. That's been the case for the last few sessions as well. Options data comes up for you in the screen. 23,300 call was fairly active. 23,000 put as well was fairly active. So punching in these data points, punching in the recent highs and lows that we have seen, technically, this 22,950 mark, 22,900 becomes very, very important. In the past week, numerous times we went to 22,950 or thereabouts, and from there we saw a bit of a bounce. So you don't want the 22,900, 22,950 mark to get broken. On the upside, we've been trying to get to that 20,350 mark, but that's been proving as a bit of a resistance. So that's going to be the important mark. The bulls will want to get closer to these levels and, in fact, then try to cause a bit of a short covering bounce, which hasn't happened till now. On the Nifty Bank, well, we'll have to keep an eye out on that one. That 47,900 mark, that's a recent low, that becomes crucial. And we have been seeing a bit of a U-turn from around that 48,900 odd mark. So the GIFT Nifty suggesting a bit of a downtick. Give and take everything. You have the dollar index is a little bit softer. And also you have two important events lined up for the Indian markets. Add to that the weekly expiry that plays out. I think that we should try to protect these lower levels in trade. So let's see how it goes.
Okay, all right. Nigel got that. So plenty to watch as we get started. So let's bring you the equity call of the morning. And it's coming in from Nomura. Chetan Sheth says that tariff headlines cause a whipsaw for markets, and they think investors need to brace for this, at least for the first few weeks of the new US administration. He says no immediate tariffs on China or the rest of the world has brought some relief for equity markets, but the question remains whether this can be long-lasting. We think markets will remain at the mercy of news headlines, and we expect this will likely remain the case, at least in the first few weeks of President Trump's presidency. And that's exactly what seems to be playing out, with a lot of those headlines on politics, on cross-border moves that he's making, which has been keeping markets lower in Asia. And of course, US futures, like we've been telling you, sharply lower this morning as well.
Okay, well, let's quickly run you through what's lined up here on the show over the next 2.5 hours or so. So at 8:35, we'll hear from the management of Intellect Design, Mr. Arun Jain. That's the first corporate interaction you'll hear. 9 o'clock, you'll have Rahul Malani of Mirae Asset, Sher Khan, to talk about ICICI Bank's third quarter earnings. 9:20 a.m., Manish Sonthalia of MK Investment Managers takes us through his thoughts on the market. 9:30, Torrent Pharma will be with us to talk about third quarter numbers. JSW Steel speaks to us after their third quarter. Interesting chat with V. Vaidyanathan of IDFC First after earnings which came through. 10 o'clock, Macrotech Developers on their earnings. And 10:15, it is Shriram Finance on earnings. So lots of earnings talk and outlook talk over the next 2.5 hours or so. Some flashes at the bottom of the screen, and this is, SEBI Chairperson Madhavi Puri Buch's term, which ends on the 28th of February. This is, of course, well known. The government has invited applications for the post of SEBI Chairman by the 17th of February. So, just some alerts at the bottom of the screen, which we'll want to sort of note at this point in time. Anything more, we'll get you as we go along. I think we'll take a quick commercial break here. We'll come back with, perhaps a global view, but also the top stocks to watch with our research team. So stay with us. We'll be right back.
Welcome back. Like we've been telling you, cues across Asia are fairly mixed. Several markets are shut. The ones that are open, the big one, Japan is down about 0.6%. Hong Kong markets are actually slightly higher. The implied open is suggesting a really weak start. So let's see if the bulls can buck that or not. Well, we have plenty of stocks to go over, lots of earnings over the weekend. So let's straight away get to it. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, hi, morning to all of you. Let's start with the big bank number first. Abhishek, ICICI Bank, how does it look?
Well, it was a mixed set of earnings coming in from ICICI Bank. Their business momentum continued to weaken. However, the return ratios, especially the ROA, has remained steady, unlike peers which have seen a decline. So to begin with, what's worked is that the gross NPA ratio is one of the lowest in last 10 years or even more for ICICI Bank. Core operating profit growth is around 13% on a YY basis, which is one of the best that you are seeing in last 5 quarters. The return ratios, that is ROA, has remained steady at about 2.4% plus minus 5 basis points for now 4 to 5 quarters in a row. International net interest margin is at 4-quarter high for them, coming in at 1.3 versus 1.2% in the previous quarter. Now, what's not worked is that the business momentum has slowed down in line with what you are seeing in the industry as well. Deposit growth of 14% YOY is one of the lowest that you are seeing in last 7 quarters. Loan growth less than 14% YOY is one of the lowest that you are seeing in last 15 quarters. Retail loan growth is the culprit over here. It's grown by just 9.4% YOY, one of the lowest growth with respect to YOY in last 9 quarters, and perhaps for the first time in single digits in last 9 quarters as well. Quarterly slippages of 6,000 odd crores is one of the highest that you are seeing in last 14 quarters, and this is also on account of agri portfolio. Domestic net interest margin as a result of higher slippages has come in at 10-quarter low of 4.32% versus 4.34%. With respect to the PNL, the NII is below our poll. However, the PAT is ahead of our poll. Valuations should augur well for stock movement in trade today. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. I'm looking at JSW Steel in a difficult quarter. They seem to have performed pretty okay. How did that happen? Well, because steel prices, the fall was less than expected. And the fall in input costs or raw material was higher than expected. So that's why, in fact, these numbers looked actually a little bit better. Revenue a little bit better. The EBITDA number was a little bit better. And the crucial number that we look at is the standalone EBITDA per ton. And that's a calculated number. That as well was a little bit better than what we were working with. You had the power and fuel cost. Out there was some kind of leeway because the management had said they are guiding for coking coal cost to drop by $20-25 per ton. It dropped by around $34 per ton. And they're saying for the next quarter as well, it will drop by around $10 to around $15. So that's good news. Moving to their subsidiaries, well, from Bhushan Power and Steel, that's the acquired asset. It did well. On a sequential basis, you can see there's a bit of an improvement out there. Even on JSW Coated Steel, out there as well on a sequential basis, there's a bit of an improvement. So both these two assets did well. The problem was in the overseas operations, and the US business reported a larger than expected loss. In fact, the loss was at around 150 crores, the US operations net loss for the past quarter. So that was a bit of a drag. Debt came down as well, which is another positive because of release of working capital. I expect a bit of a positive reaction because there's optimism. There'll be some duties that will be imposed on imports. And also for quarter 4, there should be an improvement of around 1,500 to around 2,000 rupees per ton. So that's why going with green on this one.
Okay, absolutely. And just a reminder, of course, at 9:40, you can hear more from the management. Mr. Jayant Acharya is going to be with us to detail the outlook ahead for the company. Let's get on to Vivek then. One more nifty company to look at. NTPC. Vivek, how are the numbers?
Well, good morning. Slightly subdued set of numbers as far as NTPC is concerned, and the main worry remains the fact that the company has not been able to go ahead and achieve the capacity addition as per what their stated guidance was, implying a very steep ask rate as far as Q4 is concerned. Now, talking about the actual numbers themselves on a standalone basis, revenues higher by close to 5% on a year-on-year basis, slightly below our poll. However, when you're talking about the EBITDA came in quite strong, almost 20% higher, coming in close to the 11,960 crore mark. Margins coming in very healthy at 28.9%. Profitability higher by close to 3.1%. However, remember, profitability looks subdued growth. This is on the back of the fact that the base quarter had a one-time income tax refund income. Finance costs have cooled off quite significantly, down 21% on a year-on-year basis. Now, talking about the group generation, slightly subdued, just 2% higher on a year-on-year basis. However, what is it that the company said as far as the conference call is concerned? they have reiterated their target of capacity addition. So 5 gigawatt of capacity addition in FY25, 7 gigawatt in FY26, 10 gigawatt in FY27. But talking about FY25, till Q3, there was just 0.3 gigawatt that was added. 0.7 gigawatt has been added in January. So in the remaining 2 months, they will need to go ahead and add another 4 gigawatt, implying a very steep ask rate. Expect some red in NTPC today.
Okay, all right. Thanks a lot for that, Vivek. Hopping across to Manglam, who's here to tell us about Godrej Consumer. Manglam, take it away.
Well, Godrej Consumer results were weak, but they weren't much weaker than what the company had informed the analysts already in their pre-quarter update. So it's in line with muted expectations. Year on year, the revenues of the company have grown just about 3% with the EBITDA falling about 10% because of the sharp inflation that we've seen in palm oil prices. Net profit as a result of which down by 14%. Were analysts expecting that? Largely, because if you look at it, versus our poll, the revenues have come in at around 3768 crores, largely in line. The EBITDA 756 crores, the street was working with a number of 757 crores as well. And the net profit just shy of 500 crores, the street was working with a number of close to around 529 odd crores as well. Domestic volume growth absolutely flat as expected itself. And the stock is priced that in. It's down about 27% from its highs, trading at around 46 times. So for starters, the stock opens in the red. But remember, from the peak, palm oil prices have come off. And this quarter, along with the union budget, has kept all the FMCG stocks in, some sort of lofty mood from a street standpoint. So will that dip be bought into in Godrej Consumer or not is the big question that we'll get an answer to today.
All right, Manglam, thanks a lot for that. Well, let's focus on JK Cement. Actually, in another difficult quarter for the cement industry, they've reported pretty good numbers. The EBITDA number, actually, the absolute number is 7% better than what Motilal Oswal was working with. So on the top line, there was a flattish number, but sales volumes were up by close to around 5%. And on a sequential basis, you had grey cement volumes that were up by close to around 13%. So the street will like that. The operating profit, yes, it was a little bit lower, but actually it was better than what the street was working with. And the next chart will actually tell you the real picture out there, because the margin improvements on a sequential basis is quite good. From around 11%, they bounced back to around 17%. And in EBITDA per ton, from around 650 rupees, it's bounced back to 4 digits yet again. So the street will like that. And the key reason is the power and fuel costs have come down by close to around 15% or thereabouts. So going by these numbers, in a quarter that wasn't that great, and have optimism about quarter 4, I expect the stock to react well in the green in today's trading session. But Abhishek has had a very, very busy weekend. He's tracking a few more numbers. Abhishek, IDFC First Pack and Credit Axis Grameen. That could be the stock of the day on the downside.
Well, yes, Credit could be the stock of the day with respect to downside. For the second quarter in a row, they have revised their guidance. And MFI is the main concern amongst both these lenders, which has caused pain in the P&L. So, IDFC First Bank, the numbers are below pole. Both the ANA and PAT is below pole. And that is on account of the fact that slippage ratio is one of the highest that you are seeing in last 11 quarters. It has come in at 3.9% versus 3.7% in the previous quarter. The retail asset quality has seen deterioration as well. Gross NPA ratio has inched up by 6 basis points. Cost to income ratio that has deteriorated and is one of the worst in last 11 quarters. If you in last 10 quarters, with cost to income ratio at 73.7%. Net interest margin on account of elevated stress has come in at 9-quarter low of 6.04%. Overall, it has impacted the return ratios as well. ROA continues to be weak at 0.4% versus 0.25% in the previous quarter. The risk in the balance sheet has increased, so risk-weight asset to advances ratio is at 14-quarter high of 119.5% versus 117% in the previous quarter. Credit, the MFI pain has led to net loss for the first time in last many quarters. FY25 guidance by them has been revised for second time in this year. So they have revised FY25 guidance of loan growth to about 7 to 8% now from 23-24% that they had given at the beginning of the year. Credit cost has been increased as well to 6.7 to 6.9% from about 2 to 2.5% that they had given at the beginning of the year. AUM growth is weak over here, just 6% YOY and a decline of 1.3% quarter on quarter. They have reported loss versus PAT of 353 crore same quarter last year and about 186 crore in the previous quarter. The write-offs are at 377 crores, so gross NPA and net NPA have inched up by 63% and close to 68% sequentially. So gross NPA ratio and net NPA ratio both have inched up as well on a sequential basis, which could weigh on the stock price today. Back to you.
All right, this is going to be interesting, all the financial company earnings. Abhishek, thank you very much for that. You'll hear from the IDFC First management, so they'll be with us at 9:50 to talk about their third quarter numbers. V. Vaidyanathan, as always. Well, let's go across to Vinny now. Indigo reported numbers as well. Vinny, good morning.
Good morning. So in terms of numbers from Interglobe Aviation, revenue came in line with estimates, but the profits of the company, that saw a decline this time versus what we were expecting at CNBC-TV18. Now, that was mainly because of the higher forex loss that one actually came in for the company. 1,458 crores was the forex loss. So adjusting that, overall then the margins as well as the profitability of the company is in line with what the street was estimating. Now, yields of the company that have also remained quite flattish, but the passenger load factor, that's a good number coming in at around 86.9%. Fuel costs, they are down by around 6% for the company. Management has spoken about how Q3 has seen robust demand. And for Q4, they've guided a good 20% YOY growth in terms of guidance for the available seat per kilometer. Forex losses is something they highlighted that impacted the net earnings of the company. So all in all, it's a decent number that's coming from Interglobe Aviation. Brokerages are also maintaining their guidance and their rating for the company. So we're expecting a bit of a green year for the stock.
All right, Vinny, Chris Martin over the weekend said, why isn't Vinny here in Ahmedabad for the concert? I said, because she's got too many numbers. After Mumbai as well as the Middle East, Vinny skipped Ahmedabad because you had a lot of numbers, Vinny. Torrent Pharma and DLF, tell us how those numbers were.
Absolutely. So I did go to Ahmedabad, but yes, surely talking about a company that's coming from Gujarat, Torrent Pharma. That side, when you look at it in terms of numbers, earnings were slightly below the estimates, though they saw a very strong growth coming in the domestic business. Revenue of the company saw a growth of 2 to 3% on a year-on-year basis. Margins are seeing a bit of an expansion. US business, that was the concern coming in. So US business is something that is yet to revive. So we're expecting a bit of a subdued move today coming in from Torrent Pharma. India business, good growth. US subdued growth. Germany also saw a slight bit of an increase, but Brazil was down because of the currency issues. So keep an eye out on Torrent Pharma on the back of its numbers. We could see a bit of red, I beg your pardon. While in terms of DLF, we are expecting green coming in for the stock today. Strong numbers coming in. Pre-sales were quite good for the company. Highest pre-sales that they've seen coming in during, in the last few years. Strong response that they saw for the newly launched Uber luxury project of that. Theirs collection was seeing a strong growth of around 23%, and overall, even the rental side of the business has seen a very strong growth. So good numbers coming in from DLF, and we're expecting green.
Okay, all right. Got that, Vinny. Thanks very much. Let's quickly move on. In fact, before we move on, Torrent Pharma's management is going to be joining us at 9:30 a.m. So just a quick reminder, Mr. Sudhir Menon will talk about the performance and the outlook ahead. Lots and lots of numbers. Let's quickly recap our stock list for the morning. It's ICICI Bank, JSW Steel, Interglobe Aviation, Godrej Consumer, DLF and JK Cement. All of those on the back of positive news flow. NTPC, IDFC First Bank, Credit Access Grameen and Torrent Pharma are stocks on the radar that could open out on the negative side. So let's watch out for this. But beyond all the earnings news flow, there was also fresh news on the whole dispute that's underway with the Religare Enterprises versus the Berman family. Mr. Digvijay Gaikwad has approached SEBI. Now, he's a new person who seems to have thrown his hat in the ring. And he has approached SEBI to make an open offer for Religare Enterprises. He says he wants to acquire a large chunk of the company. And he feels that the Berman's offer undervalues Religare at this point in time. Let's go across to Vivek to understand where things stand as of now. Vivek.
Well, that's right. So, very interesting twist as far as the control for Religare Enterprises is concerned. A fresh independent investor, US-based Digvijay Gaikwad, actually over the weekend has gone ahead and written a letter to SEBI. Now, what he has done is he has gone ahead and said that he intends to make an open offer for 55% of control of Religare Enterprises. The earlier offer that came in on Saturday was intended to make an open offer for control of 26%. He revised that higher to 55%. Now, this particular offer price is at 275 rupees a share. Remember, the Berman's offer price is at 235 rupees a share. Now, along with that, what Gaikwad claims is that SEBI norms require the open offer to cover shares the bidder would hold post this particular offer concluding, which is why if the Berman family's open offer goes through successfully, they would take control of almost 53.94%, which is why he has gone ahead and given an open offer of up to 55%. There was a response from the Berman family regarding this particular letter that Gaikwad has written to SEBI. First one, what they're saying is that Gaikwad has not made a competing open offer. He has only requested SEBI's permission. Along with that, they claim that he has missed the 15-day deadline to make a competing offer after Berman's public statement that was put out as advertisements across. Along with that, they say and they claim that Gaikwad's request lacks substance with no source of funds or any capacity to purchase the shares that he needs to go ahead and display to SEBI. They also say that Religare is accused of recklessly disseminating the letter to mislead public shareholders. They say that Berman family would be proceeding with their open offer and confident of its success. Now, what is the way forward? Number one, what is SEBI's response to Gaikwad's letter, whether or not they allow this particular open offer to proceed? Number two, they also need to determine whether this particular open offer was made on time. And an important alert, remember, tendering of shares as far as Berman family's open offer is concerned begins today. So any minority investors who intend to go ahead and tender their shares would be required to start tendering their shares from today. So it's an important development, and Religare Enterprises will be in focus on the back of this particular development.
No, absolutely. And this is an interesting story which we've tracked for a while. Vivek, thank you very much for that. Now, important news just coming in. The government has invited application for SEBI chairman's post by the 17th of February. Remember, SEBI chairperson Madhavi Puri Bhoj's tenure ends on the 28th of Feb. So that's of high interest to markets and something we'll keep track of as well. Now let's move away from equities to talk about commodities. Manisha is joining in with a roundup of what's top of mind and what is making news. Manisha, good morning.
Morning, Prashant. Thank you for that. I'm talking about the crude oil prices, which fell 3% in the previous week and have started Asia 1% on the lower side. Well, the reasons for decline are clear, that U.S. keeps calling for OPEC to reduce prices, and U.S. also has announced measures to boost the U.S. oil and gas output. We have seen U.S. imposing retaliatory measures on Colombia. That seems to be weighing onto the markets as well, because U.S. imports 41% of Colombia oil. So markets are looking at various of these developments, but we have seen the pressure continue on the weaker side. For this year, though, until now, the crude oil prices are up by 3.5% for the markets. Well, quickly on metals as well, because we are looking at some declines here, and this is a reaction to the Chinese numbers that have come in, and all on the weaker side, by the way. China factory activity, PMI numbers, services, all of that has come in on the weaker side than what the street was anticipating. It's weaker on a month-on-month basis as well. Is the reason you have copper prices down more than 1%. Zinc is now trading at a 19-week lows. Aluminum prices, even though there is scarcity into this commodity, also has been taken off. So nearly 1 to 1.5% of a decline is how we've seen the metal prices open in Asia right now.
Okay, all right, Manisha, got that. So we'll watch for this. Yeah, the cues from China this morning, those macro numbers not looking too great. Let's see if that adds a further weight on metal stocks here at home. We do need to take a break for that, break in just a bit, and we'll come back on the other side. We'll have Prakash Diwan join in. We'll discuss a lot of the earnings that have come in over the weekend.
Welcome back. Well, the gift if is suggesting we're going to see a bit of a downtick, but can we end the day higher than what we start off from? Well, that's going to be the big question today. So let's see how that goes. Prakash Diwan joins us to help us out with some analysis on all those numbers that came over the weekend. Hi, Prakash. Good morning. Hope you had a good weekend. Let's get straight to the top number, which is a big mover for the Nifty Bank as well as for the Nifty. ICICI Bank. A couple of positives in there on asset quality margins as well. The problem was that growth is slowing down, credit growth as well as deposit growth. How would you rate these numbers?
Good morning, Nigel. Thank you. Thank you for having me on the show. No, I think the numbers are very interestingly positive. It depends on what is it that you went into these earnings with in terms of expectation. But look at what's not led to credit growth, and that's the retail portfolio. And at some point in time, given the weakness in quality of retail loan assets, you would actually be thankful that it's not grown and led any kind of a diminishing impact on the quality of the book. The other interesting part is this is one more quarter where they managed to do that 2.36 zone of the ROA, which is commendable for a book of this size. My sense is, as compared to other banks, largest banks, you can't compare the smaller ones which are yet to come, and some of them have come. ICICI numbers are best in class for sure, at least in this quarter, which means that there will be more money allocated to it. So I'm quite positive the market will like it. It's just a matter of them gearing up for credit growth as and when they feel the right opportunities will come, which could be probably post the last quarter of this financial year. But very positive numbers according to me.
Okay, so good to start with positive for sure, Prakash. I'm morning. Now, I want to talk to you about, say, stocks like Credit Access, or let's throw in a Godrej Consumer as well. Numbers are bad. We all know that. Credit Access is a howler. There's a loss. No point going over the obvious, right? And similarly, for Godrej Consumer, margins are under pressure. Raw material costs are high. Sales growth is not really happening. The question is, how much of it is in the price? Now, for both of these stocks, would you be a brave heart and buy on dips, or do you think it's best to stay away for now?
Good morning, Surbhi. So I think MFI is absolutely a big no. There is no reason to catch a falling knife, and the entire sector is going through a lot of systemic issues. So it's not just restricted to Credit Access. It's a good run business, well-run business, but you'd have to wait for the sector to start improving. On Godrej Consumer, I think they've indicated the weakness in their commentary earlier. There's nothing new that should surprise us. And till I think the budget comes up with something which ends up having a percolating downstream impact on demand revival, I don't see any reason why the FMCG names will start sparkling at this moment. But there could be an allocation which will start coming to these once FI money comes back, and it's anybody's guess when that happens. But in the meanwhile, the demand, the consumption pattern could probably start improving favorably, and that's when you look at it. So again, it's a no for GCPL as well.
Okay. All right. Prakash, just stay on with us. Lots of earnings. We'll quickly go into a management call and come right back to you. Looking at numbers for Intellect Design Arena, and that's the first management we're speaking with on the show today as well. The company reported a weak set of numbers for the third quarter, but there's been some recovery sequentially. Some of the commentary that we got in the press release also was sounding a little optimistic. So let's ask Mr. Arun Jain, CMD, what the environment is looking like. Mr. Jain, great to have you on. Thanks for joining in. So first the hard facts. The revenue is down 3.9%. This is, of course, we're looking at it year on year. But even if I look at the 9-month revenue, FY25, I think it's down a little over 6%. So it's been a challenging environment last 3 quarters now. Do you see any improvement in Q4?
Yeah, so I think what you are looking at last 3 quarters is only a tip of the iceberg. But we moved our strategy in first quarter last year on eMAG.ai, which I spoke about it, and we moved our focus to Europe and Americas. And we are seeing a strong traction of the pipeline, which is moving from 8,000 crore sales pipeline to 10,000 crore pipeline. And these deals are large deals which are in the offing. And so we are very, very confident that the momentum which is building up on banking modernization transformation space, because a lot of legacy transformation which is happening in banking, these deals are bigger. And coming quarters, we were looking around 700 crore a quarter. I think we are on that line of around 700 crore for the next quarter, which will wipe off a lot of previous quarter shortfalls. So eMAG.ai is a very, very interesting technology what we have brought onto the surface, where huge amount of pipeline is getting built up.
So you're saying Q4, the revenue should be northwards of 700 crores?
Around 700 crore, yeah.
Okay, got that. So that's an important one, and I think investors will watch out for it.
All right, Mr. Jain, so just get to the numbers then. It appears that FY25 will not see that big a degrowth than in comparison to FY24. Do you think it can be more or less flattish? I say this because in 9 months, your revenue is down by close to around 6%. You've done roughly around 1,800 crores. Now, in FY24, you did close to around 2,500 crores or thereabouts. So given that you're guiding for close to around a 15% revenue growth on a base of around 615 crores, do you think for FY25 it will be more or less flattish in comparison to FY24?
I think it will be growing close to double digit if you take out the GEM impact. So when we are announcing the revenue to the government e-marketplace revenue, if you cut it down, then it will be close to a double digit growth on the revenue numbers. So excluding GEM, our CAGR is 15%. Over the 3-year period. So
Not excluding it, sir, it will be close to around 2,500 crores for the year, which would mean that it will be more or less flattish, correct?
A flattish without a gem. Matlab, if you remove the gem, then it's a growth of 10%.
Got it. All right.
Yeah.
And in the last interview, sir, you said for FY26, things should look up. I think you were guiding for revenues of close to around 15%, if I remember correctly. That's FY26 in comparison to FY25. And margins, you were hinting closer to around 25%. That's on?
Okay, so let me just look at it. 2 or 3 things develop. GTB business is a healthy business on wholesale banking. We are taking a clear leadership over there with the investment in global linkers. Second is GCB business will also be 1,000 crore plus, which is the second business which we've grown in calibrated manner with the acquisition of Canada operations of digital. So there are 160 new customers we are adding to North America. So North America market will become a 1,000 crore market in next 3 years. So North America market, which is consist of Canada and USA, this acquisition is very, very important to take their business acquisition of the business.
Sure.
So that's a very, very significant development. And third piece is the AI piece, which is a Purple Fabric piece, where our technology research engineering group has built up a Purple Fabric, which is the digital workforce technology, where I spoke on 18th of December, investor call. That is a business which can go to 1,000 crore to 5,000 crore kind of a number in next 3 years. So I think.
Yeah, Mr. Jain, just to come to try and circle back. So you've given us the breakup of how this growth will sort of move along different parts of your business. But to circle back to the central question, you're at 19.5% margin roughly in the third quarter. Now, as the recovery plays out, what will your exit margin perhaps be for FY25? And can you look to get to 25%, something you have stated in the past? But, what's the timeline to that aspirational number of 25% margin?
Yeah, 25% margin is very possible right now, which is a timeline for it. It can be in two quarters, it can be 4 quarters. So those numbers are not clear because of the deal sizes are large. So that we are not able to predict. But 25% margin, we are on design the business for 25% margin. So that's what I like to have it.
You've got 800 crores, I think, of cash in the books. Any plans, any acquisition, anything you plan to immediately deploy it on?
Yeah, we started looking at acquisition now. We started the work right now with the first thing in Canada. Second thing is in global linker investment. So 2 investments we have made in this quarter. So it's a good start point. And second investment will be go-to-market for Purple Fabric. So the Purple Fabric is a first of its kind AI platform in the world, which is doing the digital workforce automation. It's much bigger than the agentic and multi-agent kind of a platform which is there. So this we are distributing through our SIs and global partners. Sure. That is what we are taking our big bets on.
Okay, so maybe Purple Fabric is the one that will make you see lots of green in the coming quarters. All right, so we'll leave it on that note. Thank you very much for joining in. That's Intellect Design Arena talking about the business improvement, sequentially expecting better revenue and better margins in the coming quarters. Let's take a quick break. Before that, Prashant?
I don't know. I mean, I don't know if we can pull up the NASDAQ futures. If we can, do we have it?
Last I checked, 1.7% down. I don't know how much is it now.
So, I don't know if you guys saw, basically the big talking point is this Chinese AI startup called DeepSeek. Right? DeepSeek has come out with this. Actually, it happened last week. But as these things happen, first of all, it's from China. Second is this AI large language learning model. And this came out on the 20th of January. Now, the thing what is hitting, I think, this is, of course, Friday's close. But what is happening now is that the fear. So what they've done is, I think the cost of building this large language model is about 1/7 or 1/8 of what OpenAI spent on, like all things Chinese, of what OpenAI spent on ChatGPT, what Google spent on things like Lambda, or, for example, what Meta, etc., is working on. And the performance, and this is the new thing, the performance actually came out. I mean, people compared DeepSeek's new large language model to ChatGPT and others. I mean, it's comparable or better. 1/8 the cost.
At 1/7, 1/8 the cost.
1/8 the cost.
96% cheaper.
So the risk is, will this really in that way pop the AI capex kind of story in the US, right? Because I mean, the only story in the US is we talk about US exceptionalism. It is actually tech exceptionalism in the US, and it spends on AI, which actually is driving all of this. So I think it's a big one. And I think Rima will join us a little later to sort of talk to us about this and sort of put all of this into context. But it's an important one. We'll take a quick commercial break here. I think we have Mitesh and Sudarshan join us on the other side with some technical trading ideas. Stay tuned. Okay, welcome back. We've got the market open coming up in about 11 minutes or so. Mitesh Thakkar and Sudarshan Sukhani are with us with what they make of things this morning as we start this new session. Gentlemen, good morning. Great to have both of you here. Appreciate it. Mitesh, 160, 170 point knock once again this morning. How would you trade it?
Morning, Prashant. So I think we'll have a gap. And, the weekly pivot suggests that a stronger support is around 22,600, 550 zones. There's mild pivot at 22,800. But I think sometime during this week, good chance that we might actually test 22,600. Unless until the gap today gets filled immediately and we start rallying again, which is a very difficult thing to imagine. So my bet is that don't venture longs in this decline. See if the market, continues to head towards 22,600, 550 zone. From there, if we get a reversal sign, that is the time when I would want to take some long positions. Otherwise, we are trading with more of short buys, though we have some, few long positions as well, which could be counter trade. But then broadly, the idea is that the portfolio or the trading positions are more tilted towards the short side.
Okay, got it. Tilted towards the short side. Got that, Mitesh. Sudarshan, what about you?
Yeah, good morning. Well, my view has been that this market needs to stop falling and build a base of some kind at the lower levels. Then only we say that this correction has come to an end. Now, that has not happened. For the last 10 days, the Nifty was moving in a narrow range between 23,000 and 23,400. So there was a remote possibility that this could hold. But today's market open suggests that this will not hold. We will again break 23,000 and go lower. So that downtrend persists. We have to be patient. This happens once a year, twice a year. And, as somebody said wisely, this too shall pass. It will go away. Just be patient. Don't dabble unnecessarily in trading on the long side. And once this decline stops, once a clear base building is visible, that will be the time when we want to enter the market, not now.
Yeah, absolutely. Gentlemen, get that point, Sudarshan. No, point well taken. The issue is the market's not shown stability. We're challenging the previous week's low every week. I mean, that happened last week as well. Now, let's see what we're in for this time around. So let's talk stocks in the meantime. Morning to you, Mitesh. What is the list? What are you going with today?
So I have more of short side trades. I have a buy on HUL as a counter trend position. Buy here with a stop below 2330. Look for targets of 2400. But on the sell side is about keep a stop at 27,400. Look for targets below 26,900. Federal Bank is a sell with a stop at 190.5 for targets of 183. And Ipca Labs is a sell with a stop at 1541 for targets of 1460. Now, with the gap down, some of these stocks might open lower, so you might not need to short them immediately. Wait for some pullback if it happens. Otherwise, avoid and wait for fresh trades.
Okay, got that, Mitesh. Sudarshan, let's talk about your picks as well.
Yeah, it's a mixed bag. See, the buys are primarily positional buys. These are dips. Take advantage of the dips and buy some good quality stocks. Colgate is a buying opportunity with a stop under 2,700. Same reason as Hindu Unilever, which Mitesh was talking about. Laurus Labs is a buy with a stop under 600. But surprisingly, on the other side, there are pharma stocks which are also giving short selling ideas. So Zydus Life is an intraday short with a stop above 980, and Oil India is an intraday short with a stop above 435. Primarily, this is a market which you really want to watch rather than participate.
And hope that some stability comes in. I mean, let price action dictate rather than preempt. I mean, as Sudarshan is pointing out. Sudarshan and Mitesh, thank you very much for joining us with those trading ideas. We have more questions for you, and we'll come back with those as we go along. We'll take a quick commercial break here. We're going to come back with the pre-open rates. 7 minutes to go for that. Rahul Malani of Mirae Asset Sharekhan is also going to be with us to talk about the ICICI Bank third quarter earnings and what it means for the stock from here on. Stay tuned.
Welcome back. Well, we are tracking all the cues, and the cues are not very uplifting, to say the least, across global markets. There's a fair amount of uncertainty and nervousness. There's tech on one side, and then there's all of this, tariff battle. And by the way, Colombia has retaliated with counter tariffs on the US. So, it's getting real now, this whole tariff issue, at least with some of the countries. Anyway, let's talk about some more stocks that we have to focus on. And JSW Steel, of course, is, a shining light in an otherwise rather dull morning. So let's discuss this one. Prakash, so Nigel's been telling us all the internals which are looking actually better than anticipated, but there is an overarching weakness. I mean, this morning we got China data which is not looking too good, so maybe metals could start lower. But all things give and take, plus the fact that there is some hope expected on the safeguard duty piece. How would you look at a name like JSW Steel?
Yeah, so what the numbers tell, the story that comes out is very simple, that they managed to though the price reduction in realizations was not as bad as what was anticipated, it just tells you that some of the quality players will be able to manage their contracts well, the geographies that they sell to, segments that they specialize in, and manage the advantage of the lower coking coal costs as well. Now, this whole scenario could continue to play out even in the current quarter and maybe another quarter. What will change the trajectory is not just the duty announcement, which probably is likely in the budget or maybe beyond that, but is the demand resurrection. If that happens, and a lot depends on what the US is wanting to do with its own growth areas. If that happens globally, it will set a very virtuous trend for ferrous at least. So I'm quite positive things will happen, but in test your patience. Interestingly, within the ferrous space, for me, JSW stands out as a very efficient player because of its scale and, as they kind of keep rolling out some of the newer facilities. And the subsidiaries have done well. I mean, the new acquisitions have also kind of started plugging in. So all in all, looks like you could probably have a buyout dips kind of a thing, but the numbers aren't as bad in as Nigel rightly said, in a difficult quarter.
Okay, Prakash, morning. Prashant here.
Yeah.
Let's do a rapid fire. Because lots of names to address. Religare, what's the call? This mystery open offer has been made. That's right. The open offer is not mystery, but the person behind it is a bit of a mystery. I don't know if you saw, but yeah.
Yeah, I did.
Good for the price, I guess. 250. The Burmans were at 235. This is higher. Go on.
But too late in the day, I guess, because the open offer would have kicked in from today, if I'm not mistaken. So you can't be making an offer just, on the eve of the start of the valid open offer. You could have done it much earlier. So I don't think it has much of this. It's just probably, some issues, corporate rivalries that keep happening. You don't even know who this guy represents and all of that. So I think it'll probably be no news in a couple of days.
Okay. IDFC first.
It's still an avoid. They keep trying to do a lot to chug along. There's great strength, potential, everything, but I don't think the market's going to be in a great mood. When especially you have even a small bank like DCB's posted some good numbers. PSU banks, BOI, very decent numbers. So this is a season where you don't reward any weakness.
Yeah, IDFC first, by the way, just pre-open has started. It's ticked down 11%, 12%. DLF, Prakash.
Yeah, so I think, again, great sales value, but where is the inventory to continue growing at this rate? So I think peak performance is already priced in. People are forgetting the fact that if DLF has to sell these 30, 40 crore kind of units, they'll need to build as well. And there's not much available real estate assets that they could rely on. The cost of acquisition is not the same as what they are now building on. So I think it's past its prime. Though there could be some sort of upside, you can't time the peak, but I wouldn't look at it. Though the numbers are very encouraging, everything's fine. Time to probably book out at these astronomical levels.
There are two initiations also. There's Vishal Mega Mart. We should just look at the price. And there is this company called IGI. They do lab-grown diamond certification. It's recent listing. So two new initiations there as well. You have your view on any of these?
IGI, I really like that business. It's a very less understood kind of a area. We've never had something like this because LGD itself is a very new presence of sorts in our cognition and in our consideration. But I think IGM, IGI, if understood well, will probably become a. So it's like the rating agencies business when it started. Nobody thought CRISIL could grow so much, or a CDSL, or well, all of these support services which really make a lot of sense in terms of growth trajectory. So picks and shovels kind of a story. Don't go after LGD, go after the guy who certifies it. LGD.
Okay, fair enough, because irrespective, the guys who are certifying and asking for a fees for it, they'll continue making money given the demand. Got that. Yes. Stay on, Prakash. More questions in just a bit. But look at the drama playing out, the global tariff drama. And these are global tariffs and two countries we're talking about. Look what's happened. Now the White House is saying that the US may not actually levy that 25% tariff that Trump threatened just hours back. The Colombians said that they will also levy, their own tariffs. And the reason why this probably is going to hurt a bit is that 20%, I believe, of the coffee that's coming into the States comes in from Colombia, among other things. And then there are things like flowers and so on and so forth. So, all of that also, starts to get impacted. But let's see. Right now, the latest news flash seems to be suggesting that, the White House may not actually levy the tariffs at all. They might reach a deal. And just in case you missed these headlines, because so much happens overnight now, all of it started because Colombia said this, U.S. Department of Defense plane that's coming loaded with deported immigrants will not be allowed to land. They said, why are you treating our, nationals like criminals? They should have come on a regular, maybe a, Homeland Security flight or something like that. So this is almost like a soap opera, but it's real.
It's real, but I'm not. Surabhi, the thing is, there is, for example, the tariffs on Mexico and Canada, etc. Right? That is essentially the aim behind it is not to reduce trade deficit. It's basically to reduce the flow of fentanyl, drugs into the US, right? Yeah. Similarly with Colombo, this is driven, as you said, because they're not taking back the people they're sending. US is sending back.
It's become an instrument to it's become like a whip. It's not so much economic policy.
Correct.
It's a whip to get people to fall in line.
Correct. But my point is, it is easier to solve. That's my point. As opposed to large trade deficits with countries like, for example, with China.
Absolutely.
Which is not driven by, if you do this, I will not do this. It's structurally, there's a big disbalance. And Trump has kind of maintained that view that we need to solve for it. So that's the only kind of difference, I think, that we are looking at right now. But I think we've got, Mr. Digvijay Gaikwad now joining us. He's an American businessman, and he's thrown in his hat for Religare. Mr. Gaikwad, good morning. Great to have you with us here. Thank you very much. You're smiling. The first time on CNBC-TV18, so welcome.
Here is a Sunday night. Yours is Monday morning. I think looks like you guys in a business mode, and we are in the sleeping mode. So let's do it.
No, you don't look like you're in a sleeping mode.
No, and thank you for getting me in your TV.
You look up, bright and perky, sir. So good to see you. So tell us a little bit about your interest in Religare. What is what's this about? Because it came as a bolt out of the blue.
It's nothing out of blue. Any offer you give, it's always be out of blue. Because I saw the value and I thought that it's a good value to go after. I did a very, very reasonable offer. Because in America, if you look at it in US, most of the offers are at the closing time stock. And then you get it about 17 to 20%, 15%. That's all I did. This is nothing extraordinary or no other event. I don't think so.
Yeah. Do you have interest in Indian financial services firms? Do you own shares in any other companies here? Have you been involved in that sense? Because here you're making an offer to buy a significant chunk of equity in a listed Indian financial services firm.
Is this some kind of criteria that you have to own, otherwise you can't own?
No,
you
it's
have
not.
Always the first try, first attempt, first time. maybe not India, but I have a lot of experience in America.
Okay, so tell us, what's the status of this offer that you've made now? You're asking, you've written to the regulator. What are you seeking to do here?
Not only one letter, I hired the proper attorneys, and we have done a series of letters to the SEBI. So that way it's very easy, you know. So
okay. All right. Hi, Mr. Gaikwad. Thanks a lot for joining in. Couple of quick questions, sir. All right. Do we have him? Okay, I think we'll get back to him. We need to know a couple of more details with regard to, has he appointed a merchant banker? Is a lawyer in place? Because as of now, it appears it's just a letter of intent to SEBI, but he'll come back and he'll give us some clarity with regard to this offer. So we'll wait by. Religare is the stock that we'll be focusing on in just a bit. For now, for the time being, the stock is up close to around 2.5% or thereabouts.
Absolutely. Well, that's an interesting conversation with Mr. Gaikwad. 2.5 higher for Religare. 256 or so is where we are now trading at. Do we have... Okay, I think Prakash is still with us with sort of more on stocks, and we'll go back to Mr. Gaikwad in just a bit from now.
Okay, let's ask Prakash about a couple of other stocks. Prakash, you know, in pre-open, we have DAM Capital that's up close to around 8%. Now, you know, in December, we saw the stock list. It had multiple times subscription. The stock went up, I think, 40-50%. And from there, it came below the IPO price. It came out with a set of numbers. Any view on DAM Capital?
No, I think I haven't looked at DAM Capital specifically, to be honest, but the space is very promising. Remember, there's a lot of activity in terms of IPO, issuance, OFS, QIB, you have, you know, whatever you have. So there's no reason why some of these marquee, well-placed intermediaries won't make money. It's good time for, you know, the plays in the capital market of this variety at least, and not just broking. So I'm quite positive, and I'm sure the numbers will kind of continue to improve from here on. And they're smart promoters. They know what market would like. Things probably will be very well aligned in that sense. So yeah, it can probably be continuing to reward investors. But I don't have a view in terms of numbers, in terms of what expectation you could build on here on.
By the way, I'm actually reading from the letter that you know, Mr. Gaikwad sent to the stock exchanges, and then he's back with us. Great. So just to, you know, Mr. Gaikwad, to go back to the point, I'm reading that letter, and obviously because of public disclosure requirements, Religare had to put the letter out on the stock exchange, and it said that our proposed competing offer will be revised for 55% of outstanding equity share capital in compliance with regulation. Basically, you had to match the size of the Berman's offer, which is why I think your own offer is going up. So tell us the details, and more importantly, why? Why are you looking at Religare?
Hello.
Yes, Mr. Gaikwad.
Yes, I'm here online.
Sir, the question is that, you know, tell us the why first. Why are you looking at Religare? And also, apparently, the size of your open offer now will have to be 55% to match the total size of the Berman offer. If you could just give us the details.
So I will give you a very simple question to you. You are an expert. You are always on the television. Tell me why not? Is there any reason one should?
Absolutely can, sir.
I think I'm confused with your question. If somebody offers to buy something, is this an appropriate question to say?
No, sir. So I'll tell you.
I'm giving my intent. I'm giving my letter. I'm giving my offer. I'm giving my price. And what other reasons can be?
No, sir.
It's a great opportunity. It's undervalued stock. And I thought I can give a better value to shareholders.
Okay, I get that. You can absolutely, you know, make an offer for an entity where you think that a competing offer is undervalued. We're just trying to understand your business intent, Mr. Gaikwad. What do you like in Religare as an entity? What is the business thought process with which you're looking at this entity?
It's a value buy. We are value buyers. I find a good opportunities, and if I see the value is there, and if I can enhance the value, that's called value buy. I thought I will bring a perspective from US, you know. It will be foreign direct investment. And Modi ji and all good leaders are coming, Madam Sitaram and all, they come and say, invest. So we keep looking opportunity. When we see, we strike it. I mean, it's nothing unusual or anything crazy. It's a very simple open offer. You know, it's not, I'm trying to sabotage anything.
Got it. Hi, Mr. Gaikwad. This is Nigel on this side. And thanks a lot for staying up and joining us. Let's get a few details out of the way. So you're saying you've sent this letter of intent. Have you appointed a banker? Do you have lawyers in place?
Yes.
Both.
Yes,
You have appointed a banker and you have merchant banker has been appointed, right?
Yes, I have a merchant banker. I have a lawyers. I have a team of lawyers. And I understood. And that's why I need the regulators to give them proper offer. Send first one letter, then second. We always send a third letter in 2 days. Yes, sir. We are following the procedures which are necessary over there, you know.
Got it, sir. All right, let's go to the next point. You will be categorized as an FII. Is that correct?
FYI?
FII, foreign institutional investor. Will you be categorized as an FII?
I don't know what is your category. I'm here.
We just want to
developments and investments.
Yes, Mr. Gaikwad, what we are trying to understand is you will be allowed to hold more than 30% as per your legal, experts.
I don't know, but I have to answer you because you asked me legal question.
Yes.
It is very wise. Somebody told me not to talk legal when you don't have law degree.
No,
and
but
I spend money.
Your lawyer said
sure they have seen.
Mr. Gaikwad, your lawyer said that this offer you can go through and you can legally hold 30% in the company. That's what your lawyers who you have paid the legal fees to have told you, correct?
Yeah, you are putting words in my mouth, gentlemen. If I have to answer for my lawyer, I will ask him your question and let you know. But I'm sure we're doing the right thing, but you're putting the wordings in my mouth, and I'm pretty upset about it. What are you trying to tell me? Oh, yeah, you're doing this because of this, and you are
No, Mr. Gaikwad. Mr. Gaikwad.
Very, very candid conversation.
No, absolutely, Mr. Gaikwad. See, we are here only on behalf of, public shareholders so that they have all the information they need.
Absolutely.
And in light with that, sir, allow me to ask you, see, when there is a counter offer, any entity is coming, as a counter offer for some entity, public shareholders want to know how liquid you are, how will you fund this, large takeover offer? Right. If you could give us some sense of the cash that your group has right now, will you be taking on loans? What is the current, borrowing levels of the group? We just want to understand you a little better so the public shareholders can then make up their mind.
I understood what you're asking me.
Yes.
We have financial capability. We can say that.
Okay.
Even if you go to buy a car in the market, you have to have money. You don't go and just put an offer, So we do have our financial
level of cash? I mean,
and
just to understand your group.
Madam, let me speak 1 minute.
Yes, sir. Yes.
When the time comes, if the SEBI is asking me this question or RBI, whatever those authority, I'm prepared to give them, but I don't want to make it a public debate before, horse over the cart. Right now, I have asked for open bidding. I have asked for other things. I have asked for proceeding. I want transparency and the shareholders understand who I am. That's all.
Okay,
it
all
will
right,
all come in a due course because that's what I guess SEBIs and banks or I don't know who are those. They will all ask me all those questions.
Correct. All right, Mr. Gaikwad, we appreciate you fielding all our questions. Just one final question. Are you related to any Religare board member or Ms. Saluja?
No, sir.
Not related to any Religare board member or Ms. Saluja, right?
No.
And have you had Mr. Gaikwad, have you had a word with the Religare chairperson or any other board member?
I would love to have it when the time comes. I would love to have it with anybody and everybody. Why not? We have to all work together.
But so far,
this is just a negotiation.
No, absolutely. But so far, you've had no contact. You're saying, right?
What do you mean by contact? I know her personally like that, or I go to her house.
Do you know her personally? Have you spoken to her after you made this offer?
I'm in Ocala. I had a big function in Washington, D.C. on January 19th. I'm right here at my house. You can see my house. So.
Okay, that isn't an answer, but we'll take it for now.
I also don't know Mr. Burman. I know their company, And I said that in my interview clearly. I would love to know them, everybody. Why not?
Absolutely. Absolutely. When next time, absolutely. Next time you're here, sir, we'd love to sort of have you with us here in our studios. Thank you very much, Mr. Gaikwad, for joining us, taking out the time late for you. So have a good night's sleep. We'll speak again, sir. Thank you. Thanks very much.
It's not that late, but you guys are pretty fast and hostile. Give me this, give me the money, give me that. Like,
no, it's our job to. It's just our job to ask the question, sir. So we just did that. Thank you very much for
joining. Tell you the last comment. Can I give you a last comment, if you allow me?
Please go ahead, sir.
Look,
please go ahead.
All I hope, as an American citizen, I hope it's a transparency procedure. And a shareholder's rights has to be protected. If I'm giving a larger offer, I'm not a criminal. I'm their friend. They're going to enjoy me, and we're going to bring them a new perspective from USA.
Absolutely.
Okay, all right, sir.
What is a fairness?
We appreciate you joining in, sir. We ask all the questions for our viewers as well as shareholders, and we appreciate all the answers you have given. We look forward to having a chat with you as this offer progresses. For the time being, the rally gas stop is up close around 2%.
Absolutely. 0.75%. Let's move on to the market and quickly take a look at what's happening. So 22,925, we're basically back at the lows that we were talking about earlier. This is the point which the market, I was saying earlier, defended once. Once this level has been defended, and then the market came back above the 23,000 level quickly. So will we be able to do it one more time? The only difference is that you've got US futures which are lower. I mean, between 1 and 1.5%. At that point in time, US was still sort of nicely cruising along, and the market here was just sort of falling on its own weight. Domestic, local reasons. The sensex is down about 0.75%. You've got the IT index, which is down about 1%. Look at the Nifty heat map. Everything is down except about 5 or 6 names, which are starting up in the green. 22,900 on the index. Surabhi.
Okay, there's a lot of pain in the mid-cap market, and that was the story of last week. It's extending this week. The mid-cap index is down 1.5%, which means the fall is almost double the large cap screen. We'll come to more mid-caps and what's sort of under pressure over there. But the casualty of the morning, Nigel called it properly, was Credit Access. That stock's down about 14%. Now, with that headline out of the way, let's see what's bruised the Nifty. BEL is down 2%. IndusInd Bank is down 2%. Let's look at the reaction on ICICI Bank. ICICI Bank is actually up 0.5%. Pretty decent performance and good numbers as well. JSW Steel, despite a good show, I mean, there are global headwinds this morning. So stock is lower by about 0.7%. Let's check NTPC as well. NTPC is the other result reaction, 1.5% lower on NTPC. So it's an overall fall. Infosys, Trent, M&M, BPCL, Tata Steel is cutting across sectoral lines. Nothing's holding up, at least for the timing, till some some semblance of stability comes in. There is a little bit of buying in FMCG, Britannia, Lever, Asian Paints, ITC. They are either flat or slightly positive. And then there is Dr. Reddy's. Apart from that, everything is down for the time being, and the markets are still trying to find a base.
Well, should be a couple of stocks are doing well, so let me just highlight them. DCB Bank, we had the NIs that were up close to 15%, and the gross NPAs cooled off as well. So the street has taken note of that. So that stock, in fact, is doing fairly decently this morning. I think it's up close to around 8% actually. So good going on that particular name. On the flip side, a few more stocks that should come up for you on the screen. Pull up JK Cement. Let's see what that stock is doing to kickstart trade. That should come up for you on the screen. The numbers are pretty okay. The mood of the market isn't that great.
0.5%
but
up.
I think that one's up. It's up close to around 0.5%. Sierra Silk Mills, not too high volumes, but that stock is down close to around 8%. Newgen Software is down close to around 8% as we speak. AU Small Finance Bank is taking a knock. And CDSL as well, I think they came out with a set of numbers. That stock as well has now lost close to around 6.5%. Remember, these are some of the stocks that did very, very well, but now they're pulling back a little bit. We'll have the management of Torrent Farmer as well that will join us in just a bit for now. So let's see what the initial take is out there. The way ahead is something that the street would like to know. For the time being, the stock is up close to around 2%. I think they're guiding for better margins in Q4 and from here onwards. And they're also seeing some kind of ramp up in their business. So a start in the red, 22,900 is defended. Can the bulls fight back? We'll have to see who's going to put their hand up and stand up for the bulls. The Nifty Bank as well at a very, very crucial level. 47,800 is from where we bounced last time around. We'll have to see whether or not it can defend that mark.
The interesting thing is that with budget, usually if the market runs up ahead of the budget, after the budget, usually the reaction post-budget is negative. Budgets are rarely positive events. Market ends down and Of course, we had that capital gains tax event. It didn't last very long. But this time, I mean, the market has already cratered sharply going into the budget. And expectations in any case are running low. So that's a potent recipe. But of course, something has got to come from the budget, right? So it's actually both fronts now. The chorus for the RBI to do something on easing liquidity. And of course, I mean, our colleague Latha, for example, wrote a piece over the weekend sort of describing the demands and potentially what can be done, the options, etc. So something on liquidity and of course something from the government side, right, to arrest this cyclical slowdown. Can anything be done? Some relief be provided to the middle class, etc. So those are bigger questions that I think we'll need to track over the next fortnight or so. I think
before Prashant, you get into the market conversation, just some context. I mean, I looked at the numbers. We know this, but when you read the number, it really hits you. It's been a tumultuous start of 2025. The Nifty is already down about 3.5%. The mid-cap index is down 8.5%. The small-cap index is down 12%. So it's been a crunching blow. And I think this is the real question of a lot of the retail money as well. And we'll have those questions and those trends play out, whether now retail money can still keep the faith and keep the buying going, because now is when, I mean, you're seeing your profits down 25-30%. So what will people do in the event of such a decline? And it's the one that we're in the midst of even now.
Absolutely. And so far they've kept the faith and the money is kept sort of rolling into mutual funds, etc.
And history suggests that this is normally the best time to keep your SIPs going, right?
Yes.
I mean, personally, I'm doing that. So I'm backing myself.
Yeah, absolutely. And the SIP book, I mean, actually the discretionary book in terms of mutual funds has been up and down, but the SIP book has continued to remain very steady. And that's basically, I think, about 85% of the money which goes into mutual funds is through the SIP route, not the discretionary route, which is essentially lump sum based on what the market is doing, etc. So it's systematic plans which have kept things going. You got some bond market flashes there. 10-year yield has fallen to 6.64 versus Friday's close of 6.72. So that's interesting. And we'll have to look at this a little more closely. 86.36 on the currency. I think though that is, the dollar is a little stronger as compared to the last close. We'll have to just sort of put these into context. But, I think a noticeable fall coming in on the 10-year benchmark as well. Okay, markets recovering a little bit. We're back at about 22,950. Manish Sontalia is a market master of the day. He's Chief Investment Officer at NK Investment Managers. Manish, good to have you with us here. Good morning. Thanks very much for your time. So how are we set up with the fall that we've had and all the events in front of us? Would you say a bulk of the fall, at least at an index level, is done?
I think another 5% on the downside and we'll be probably done. I think markets won't sustainably be there below 22,000 for a very long time. All the negatives are largely known and is being priced in the market slowly and gradually. But below 22,000, I think there could be earnings comfort, whatever 10-12% earnings comfort on the Nifty 50 for 26. That's par the course, and valuation of 17-18 times is doable. I mean, last 10 years average valuation has been 17-18 times. So I would think at the index level, Nifty 50 level, you could see some buying support come in below 20,000.
That's good to hear. That's good to hear, Manish. That maybe we're probably at the bottom of the pit now, and it gets better from here. So you're saying that at around 22,000, given the earnings projections right now, we'll be at 17 to 18 times. So let's take that earnings piece as, up as well. FY26, I'm not talking about FY25. This has been a write-off year anyway. FY26, what are the kind of numbers that you're working with at this point? Give us some sense on the recovery and what makes you hopeful that eventually this trough will move higher.
So FY25 probably will end Nifty 50 EPS levels of 1075. And you add another 10% to that, that's 107. And you add another 10% to FY26 numbers. And you'll get to a level of 1315. So on the average of FY26 and FY27, you broadly be at 1250 on the Nifty 50 EPS. And you give it a valuation of 17 to 18 times, you're broadly there at 22,000, 22,000. Last 10 years, median valuation has held at around those levels. I think we'll fall to those levels.
given the spate of negativities that are surrounding in the market. And from there, it is going to be pick and choose on the Nifty 50 numbers. Companies that will deliver good numbers are likely to find support. Companies likely to report better than EPS growth estimates of 10% will likely outperform, is what my understanding.
Hi, Manish. Good morning. Good to see you, Win. So, 5% from here will take us down to the 22,000 mark that you're talking about. My worry is with regard to the broader markets. Now, that's seen a crunching blow. We're not talking about 8, 10%. That could be only the headline index. Stocks have fallen 25, 30, 35, 40% as well. Maybe some of them ran up ahead of themselves. What's your view on the broader market? Still more pain to go, or do you think bulk of it is now getting factored into the price?
So, Nigel, at the index level, it should not be coming as a surprise to anybody that valuations were deviating 1.5 times standard deviation away from the mean. And in extreme euphoric times, even in the past, such sort of valuations for the mid-cap index and the small-cap index were never seen. Of course, we can discuss that, individual names would have merited elevated valuations and so on and so forth. But for the index as a whole, that is what is giving me, right? And even now, the valuations really have not come down to historical averages as far as the mid-cap and the small-cap numbers are concerned, the index level. So that is what is correcting. And obviously, there will be individual picks which will be outperforming the index and some will be laggards. But I think broadly, that is what is playing out. It was elevated. Valuations didn't match up to historical averages, and it's just meandering and reverting back to the mean.
Manish, what will you buy? But people are saying this dip is a great buying opportunity for a longer-term investor. What do you think has come to those levels that you like?
Yeah, so medium-term and long-term story of India still hold both. Short-term is a bit of a pain, and I think I have reiterated in the past as well. Currency depreciation is the theme for calendar year 25. Buy export. Buy banks because they're extremely cheap, buy health insurance and all those plays, and buy capital market related entities. They would relatively outperform given, the growth outlook that you have for the medium term and certainty about it. And the rest of the spaces is a lot dependent on policies, currencies, when you come to import related stuff and elevated valuations. So I think these are the areas where you can hide on a relative basis, which will likely do better than the rest of them.
Yeah, no, you can hide, but you can't. But anything where you can make money, hiding is one thing. Manish, talk to us about a couple of ideas. You're a bottom-up guy. With full disclosure, something which has fallen enough and where there is value. 1 or 2 names, which gives us a sense of how you're thinking about things. Yeah.
Yeah, so Prashant, I think there's a lot of value in health insurance companies, and you know the names broadly. They are at very beaten down valuations. You were discussing one of the names earlier during your conversation before I joined in. These are some of very exciting plays and available at very reasonable valuation. You will have a case of commissions across the health insurance companies coming at par. Today, Care Health is paying high insurance commissions. Then maybe a Star Health 1 year down the line, they'll be at broadly the same levels. You are looking at 20 to 30% sort of a growth out here. You are looking at prices which are at 2-year lows. There's adequate margin of safety. When it comes to large cap banks, of course, you have pain in the retail NPA credit cycle. Tier 2 banks won't be able to handle it that well as the large caps. And today we are talking about large cap banks, both in the public and the private sector, trading at less than 15 PE multiple. There's ample comfort out there. Pharma, in any case, both on the generic export side, domestic CDMO side, export CDMO side, the runaway is big. And depending on how each individual company reports numbers, there's a lot of play and value out here. And of course, your platform companies, you have the Zomatos of the year. The numbers were not good. Profitability was an issue. But I would still believe that, on a medium term basis, it should be good.
Okay, all right, Manish, always good speaking to you. Thanks a lot for joining in. As you said, 5% maybe at the maximum on the downside on the headline index, but individual stocks and themes is what you like. Let's move on to our next management, Torrent Pharma. That's a stock in focus to discuss the past quarter's numbers as well as the way ahead. We're joined by Mr. Sudhir Menon, the Executive Director and CFO at the company. Hi, Sudhir. Good morning and good to see you, Ben. Well, let's talk about the largest part of your business. And in quarter 3 FY25, the domestic formulation sales grew by around 12% year on year. That even beat IPM growth, which was around 8%. And this was led by chronic therapies. Will India growth from year on as well continue to do well? And will it be led by, chronic therapies? What could the guidance be, say for quarter 4, for FY26 as well?
Yeah, good morning and thank you for having me. I think before I comment on India business, would quickly want to give some color on the overall performance for this quarter. So quarter 3 had 2 lowlights. One is the insulin business, which is a 1 quarter temporary impact, which we had guided in quarter 2, has impacted the overall revenue by 2%. And the second one was the Brazilian real depreciation of 17%, which again impacted the revenue by 2%. Normalized for these temporary impacts, the revenue growth is 7% and operating EBITDA growth is 12%. And again, on YTD December, if we normalize for these 2 impacts, the EBITDA growth has been 15%. So the underlying growth continues to be strong for us. And while insulin impact normalizes in quarter 4, the BRL depreciation should start normalizing over the next 2 to 3 quarters. And therefore, from a long-term story perspective, the story is intact for us. Coming to India business, I think again the market growth of 8%, as you said, we've grown by 12% in quarter 3. And on YTD December basis, we've grown at around 13%. And while we continue to outperform the market in all our focus therapies, what's more positive is that in therapies where we are over-indexed versus the market, we've seen stronger performance. For example, cardiac, while the market has grown at 10%, we grew at 16%. In gastro, the market grew at 8%, we grew at 13%. And CNS, the market grew at 8%, we grew at 11%. And anti-diabetic, the market growth was 10% and we grew at 17%, so on and so forth. So essentially, we've been focused on the chronic segment, where the chronic segments contribute 75% of our total portfolio, and it's only 25% which is acute. Our strong growth, I believe, is because of the continuous reinvestments which we have been doing in our domestic business since 2021. And since then, number one, we've expanded our vehicles by almost 50%. Second is our investment in the OTC segment, which has helped us in scaling some of the larger brands where we are seeing strong incremental growth coming in these brands.
Right, Mr. Menon, Mr. Menon, you're giving us a good amount of details qualitatively, but since we're a little short on time, we request for some quantitative guidance from here on as well. As you said, you've done a whole host of measures. Chronic is bulk of your business, and that's done quite well. Tell us, what's the outlook? Do you continue to outgrow the industry? What could it be in percentage terms? And what about the US business from around $32 million of revenues on a quarterly basis? Where does that head? Please go ahead, sir. Some quantitative numbers.
Yeah, I think from a next 2 to 3 year perspective, based on the reinvestments which we have done in the business, our objective would be to grow double-digit as well, right? The same as this year. And as far as US business is concerned, the US business will be a gradual uptick story. The first goal for us is to achieve a profitable growth than anything else, because today US is negative. And we should see 5 to 7 launches happening in FY26, and that could help us to grow the business by 10 to 15% over the current base. There could be higher opportunity in these launches if the competition landscape is looking much better, I would say.
Mr. Menon, hi, good morning. Prashant here, and good to see you on the program, sir. It's been a while. So just to get those numbers out of the way, India's business revenue growth and US revenue growth, what should it be? You said 5 to 7 launches in FY26 in the US. So just those numbers?
Correct. 5 to 7 launches in FY26 for the US business, which could help us to grow 10 to 15% over the current base, which is 120 million.
Okay, 10 to 15% in the US. Got that. I think you've answered that launches question out there. So 5 to 7. Now, insulin CMO sales were nil during the quarter. You began by saying that you would kind of sort of guided around that in the second quarter. Could you give us a sense of how that is likely to sort of come about in the over the next many quarters? What's the normal run rate of sales per quarter?
So the normal run rate is around 75 crores a quarter. And as guided in quarter two, we have taken a temporary shutdown for upgrading certain European guidelines, I would say. And we had also guided that the manufacturing facility will be released in December, which we did. And the dispatches have started in January. So quarter four, it normalizes.
Okay.
What about margins, sir, if you can give us a sense? You've spoken about improving margins by between 50 and 100 basis points over the next 2 to 3 years. Okay. Is that on track? This is an annual improvement you're aiming at, and what will drive this?
Yeah, so I think this year we should close at 32.5% versus 31.4% last year, registering an improvement of 110 basis points. Our branded segment accounts for 76% of the overall revenue base. And we do not see a significant mix change over the next 2 to 3 years. And that be so, we believe the margin improvement story in the base business between 50 to 100 basis points should continue playing out. Additionally, there is an incremental positive which US launches might give. And all the more, we believe that the margin improvement of 50 to 100 basis points should continue next year as well.
Okay, all right. Mr. Menon, just one query. US business will grow and you're looking at profitable growth. When does it turn profitable?
Well, maybe it will take 3 years' time, I would say.
3 years' time. And what would the revenue number look like? As of now, you're doing a quarterly run rate of around 32 million. So at break even, what would it be? Around what, 40, $45 million on a quarterly basis? Just a rough number, sir.
Oh, it's all dependent upon the market factors, right? I mean, there's one price erosion playing out on the base business. The second is the new launches. If there's no competition coming in, then the story is different, right? So for me to give you a number as to at what level it could be profitable is a little difficult at this point in time.
Okay, all right. Final question before we let you going then. Could you tell us, how is your balance sheet looking like? I'm looking at your interest cost. I think it's clocking around 55 crores per quarter. But I believe you have an intent of getting net cash as well. So what is the trajectory on that front? The current debt in the books, and by when do you turn debt free?
Yeah, so I think as at 31st December, my net debt position is 1,900. And this being so, I personally believe that maybe first quarter of FY27, we should be net cash.
And current debt, you said, is 1,900 crores, right?
Net debt is 1,900 crores.
We appreciate you joining in, Mr. Menon. Wishing you all the best going ahead. You're guiding for better times for the India business. US business eventually will break even in the next few years and will grow at around 10 to around 15%. And you're going to be net cash by quarter one, FY27. By the way, as we had that chat, the Nifty has cut its losses. We're now closer to around the 23,000 odd mark. For the time being, we slip into a short break. Come back. We'll get chatting with the management of JSW Steel. Don't go anywhere. Welcome back. Well, at least you have the headline index that's seen a good recovery. SBI as well as HUL, both of them have come off the low point of the day. So good on that. The broader markets, though, still in a bit of pain. Less than 200 stocks advancing as of now. As promised, let's focus on JSW Steel, though. The company actually reported a better than expected set of numbers in the third quarter. To talk in detail about the company's performance, what's the way ahead, we're joined by Mr. Jayant Acharya, the Joint MD and CEO at JSW Steel. Hi, Mr. Acharya. Thanks a lot for joining in. Well, before we get to specifics on the results, there's a looming fear of a slowdown on ground. Could you help us with your take? And what does it mean in terms of your guidance on volumes?
So if you look at the quarter two growth, which was a little slower, but it was impacted because of election year, central and state both. And that, I think, slowed down the CapEx spend overall. So the CapEx spend from April to November was a little less than 50% of the overall capex spend for the full year. The government has guided that the capex will pick up, and we are seeing signs of that being reflected in the last quarter itself in the long products, where although the prices of flats did decline, but in the long product space, the pricing remained better and positive. In the month of January, I would say that we are, even if you look at December, just to go back a bit, we had 13 million tons of demand in the month of December in India, which typically on a closing quarter, this thing is in a weak price environment wouldn't have been so. But that is because of the traction which is now coming in. So January to March overall, we would expect, let's say, a similar rate, if not a slightly better. So we would end the year with 150 million tons of demand, incrementally 14 million tons up. So demand point of view, I think we are more or less at about 10% level up in India compared to what we were last year, which is quite a good growth.
Mr. Acharya, just coming to you, those are important flashes coming in, on the ticker. We'll just go back to Mr. Acharya in a bit. This is from our, sister channel, CNBC-TV18, that the airline regulator has asked airlines to regularize fares. Now, this is not something that I think we hear on a day-to-day basis because it's absolute free pricing. We'll have to get more details on that story on what exactly does DGCA mean by regularizing fares. What are they proposing? Because the government has made it very clear that there are no caps. But anyway, let's see what does regularization mean. Back to that story in a bit. But let's, ask Mr. Acharya about the trends ahead. Sir, volume growth for the company, your targets, and, do you feel that steel prices have bottomed out? Just throw in some more light on this.
First, on the first question, the volumes from JSW, as we had guided, will be very close to the guidance, maybe in the range of about 98%. We expect this quarter's volume to be strong because the JVML capacity is ramping up, and we will see increased volumes in January, February, March from the new facility, and also aided by BPSL reaching rated capacity levels. So volumes will be strong in this quarter. From a price perspective, as I said, non-product prices got a traction because of better project pull. I would expect this pace to continue. On the overall pricing, I feel the prices have bottomed out. We would see lower imports, specifically now from flats coming into India, and that will play into stabilizing prices in this quarter and going ahead. So we would see that support margins. So strong demand, better volumes from JSW. We will also have likely lower costs, and stability in pricing because of lower imports would be supportive for growth and margins both.
Better demand, which results in better volumes, pricing will be stable and input costs will be down. So put all these factors together, will it mean that better EBITDA per ton is what we should look forward to? Also, could you quantify what is the benefit of lower coking coal costs in the past quarter?
Yeah, so EBITDA per ton is one thing. Let me first answer the coal point. Coking coal last quarter went down by about $34. So that is something which was positive. We expect coking coal to further go down in this quarter between $10 to $15. On the iron ore side, also some moderation has taken place, has reduced in the month of Jan, and that will play positively into our pricing. We also do expect, as we have seen in the OMC auction, that the prices have fallen somewhat. So we expect maybe another correction which would come in the near future. So that would be positive for the cost as well.
Yeah, absolutely. So lower raw material prices, better volumes, good demand, maybe stable steel prices, all of it sounding good. So, sir, let's now move on to this whole royalty issue in Karnataka, because there's been some back and forth on whether it's going to be levied retrospectively or not. What is your interpretation? Because if NMDC ends up having to pay higher royalty, then this could impact you, right?
So as we understand the law today, I think this is still under debate. While in the Karnataka mineral law which they're proposing, they are not proposing any kind of taxation on mineral rights for auction mines, except for a small amount on land. We will have to see how the responses which the governor has sought is replied to, and then how it goes. Regarding NMDC's ability to charge, I think that is something which we will have to see as it goes. But we do not think that you would be able to charge anything retrospectively, where there was some kind of feelers from some ends, but that is not legally possible as we understand it today. The government has also filed a curative petition, and there are some other associations and companies which have filed curative petitions. I would expect more rational behavior or more rational policy on this matter from state governments, because at the end of the day, you should not kill the golden goose. If the tax becomes too high and the operations get impacted, then the impact on the mining royalties on an absolute term and the steel GST, SGST impact will be far more than what they expect to gain out of this increase. So the matter is sub judice. I think let us wait to see how it goes.
All right, the hope is that we get a more rational verdict on that front. But let's focus on duties. You all have made a very, very strong pitch. What's the timeline? When do you expect some kind of protection for the domestic ferrous industry?
The government has initiated trade measures or trade investigations to put measures in place in case they find the findings to be positive. We are looking at probably somewhere in the first half of February where the government will be able to take a view. I think the responses were to be filed by the exporters and the consumers by 22nd of Jan. They would have come, so I'm expecting that the reviews would be going on, and we should hear something soon. As far as the level playing field is concerned, I think this is absolutely necessary since the rest of the world is putting barriers to trade. We can see steps being taken by America to look at various tariffs to safeguard their economy. Europe has done the same. Canada has done the same. Many other countries have followed suit. India is vulnerable since we don't have any trade measures in place. And it is only fair that the government looks at a level playing field and puts in appropriate duties and trade measures to arrest this kind of dumping.
Okay, got that. So we'll watch for further developments on both of those important fronts, the safeguard duty and as well as what eventually happens with the mining royalty in Karnataka. Let's talk about debt now, sir. Your debt has come down. Could it reduce even further from here?
So the debt has come down, yeah, you're right, by about 1,900 crores or so. Our cash balances are strong. It has improved to about 12,000 crores. We are focusing on the ratio. We feel that the ratio will now, going into the March quarter, will improve. Basically, the ratios will moderate downwards. Also, the denominator, that is net debt to EBITDA, the EBITDA for the trailing 4 quarters, the denominator is also going down. To that extent, I think the ratio will improve. Positive volume, positive cash flows, and some release of working capital will also aid the ratios to be going down. So that is what we are looking at. I'm not looking at the absolute debt number, but looking at the ratios per se.
All right, Mr. Acharya, we will leave it on that note. Thank you very much for joining in and giving us lots of perspective on your numbers and, of course, some of the bigger issues at hand for the steel sector as well. Appreciate you joining in today. Well, we have to move on to our next management. And as we do that, just a quick glance on the screen. The fall has been arrested. That's the good news. The Nifty is now actually trying to claw its way back to the 23,000 mark again. It's a 100-point dip now, which is better than where we were at the open. So looking slightly better. But moving on very quickly to the next set of numbers, IDFC First Bank is the next stock on our radar. We have the management with us. The third quarter earnings came in slightly below estimates, one could argue. The slippage ratio, of course, is something that the street is looking out for very, very carefully. We have Mr. V. Vaidyanathan, Managing Director and CEO at IDFC First Bank, joining in. Mr. Vaidyanathan, morning, and thanks very much for joining in. I was looking at the basic numbers, and we'll just highlight that for our viewers as we start. Your gross NPA ratio has remained largely steady. I mean, 1.93 in Q2 and now 1.94. That's not the problem. But I think everyone's trying to understand what the situation is in terms of rising slippages. What are you seeing in the unsecured segment, in the overall retail book? If you could start there.
Okay, the really good news is that the slippages have not risen. If you the last quarter to this quarter, slippages have not risen, which is really good news. Actually, analysts are penciling in a 20% increase in slippage as is seen for the rest of the industry. For us, excluding MFI, it is practically flat. MFI is a known issue, so that has increased. And MFI is a cycle. It's a cycle. It'll wind itself way down as the industry gets back to its feet on that front. So the important thing is that from the NPA point of view, let me just share some numbers with you. At a bank level, all excluding MFI, our SMA is only 0.71, quite stable over the prior quarter. GNPA is 1.81%, and NNPA is 0.49%. But the MFI, I must point out, is the gross NPA is 4.5%, SMA is 4.5%, and NNPA is 1.1%. So it's a very specific, isolated issue of MFI. Rest of the book is, as you can see from the numbers, is really stable, and we're quite happy about that.
I'm going to bring in Lata in the conversation in just a minute. She's also here to take some questions. But just to complete the point on asset quality, if you could tell us, by when do you see the MFI pain peaking out? There are different estimates there. Some people say Q4 is the worst. There are rating agencies saying this will go on till second half of FY26. So what is your reading on MFI? And also the rest of the retail book, X of MFI, can you say now with confidence that you will not see any kind of further deterioration in the retail book?
So let's take them one by one. On the MFI front, our estimates are that the quarter that's going on, Q4 of FY25, will be the max provisions. And we feel that Q1, it should come down, and Q2 should be less than Q1 26, Q2 26 should progressively come down. Because the life of these loans are typically 2 years, and 1 year has already gone by. So mathematically it should go there, but we should be very careful. There's just a lot of moving dynamics here, industry changes, and so on. But that's what our analysis is. Now, with regard to your question on the non-MFI book, I read out the numbers to you earlier. The important thing is that we have disclosed to the street product-wise SMA. We have not aggregated it. Product by product, home loans, loan against property, credit cards, personal loans, consumption financing, vehicles. Every product category we have defined the gross NPA, net NPA, and SMA. Even within SMA, we have given breakup of quarter by quarter SMA. So they're all numbers are stable. So we are, even credit cards, I know a lot of concern on credit cards, but even credit cards for us is behaving quite well.
Okay, yeah, just that, good morning, Mr. Vaidyanathan. Only that part, unsecured loan, if you can repeat for our viewers, what is the experience? Is it a little worse than others, or is it like your other loan category performance? I mean, the NPAs in personal loans, unsecured loans.
Yes. So there are, if we for just a minute keep microfinance apart, because, and just segregate it out and talk for the rest of the book. Like I said before, our credit card NPA, I'll pull out the numbers as discussion progresses and specifically read out those numbers to you. But our credit card numbers, we have put out the numbers trending for 4 quarters. Our gross NPA, net NPA, and credit cost are all trending downwards.
Okay. So unsecured is not a problem for you. It is only the MFI.
So as I spoke to you, I just got the numbers. So just permit me to read them out to you.
Sure.
Our credit card numbers, gross NPA is 1.91%, and net NPA is 0.53%. And, the rest of the book is anyway stable. So we are clearly seeing that our asset quality, excluding MFI, now it's been like 15 years. So nothing suddenly changes once in a year. We even put out 15-year trend, 4-quarter trend, product-wise. So we are seeing it's quite stable.
Okay. Okay, so you're saying that your unsecured is not the problem, MFI is the problem. The other issue that the street will have is with the fall in margins. It's fallen to 6.04. You were at 6.4 2 years ago and 6.18 quarter ago. This is because of the rise in cost of funds, cost of deposits?
No, our cost of deposit is 6.38 for 3 quarters in a row. So that's also quite stable. We're running a pretty stable machine by now. And still deposit, of course, is growing. The thing is, why it has come down is because we started to doing more of corporate loans now. Because the corporate entire cycle that India saw between 2015-16, right up to 2 years ago, that cycle has cleaned itself out. The incremental credit behavior on Indian corporate sector is quite good. And we are doing it. Cost income ratio is also quite low, just 31% in corporate book. So what happens is that, of course, the yield is relatively lesser than retail, but the cost income ratio is also better. In an overall economic sense, we're quite comfortable with that. It doesn't mean we're like going headlong into corporate, not confusing anybody here, except that we're getting more comfort with it. I must point out to your viewers and to everybody publicly on record, it's been 6 years since the merger. We have disbursed close to 40,000 crores of corporate loans. There is not a single account in even gross NPA, not even net NPA. So that is zero NPA gross, zero net. So we are running the book in a very tight manner, and that is at the heart.
You know, Mr. Vaidyanathan, if I could just come in over there, that's a really interesting point you made. And I don't think I personally remember hearing that from you in the last few quarters at least, because the focus for the bank has been very much retail over the last several quarters, right? Now you're saying that you're looking and willing to build on the corporate book as well. If you could just expand on that, say, you know, by end FY26, what's the kind of growth in corporate you see, and what, you know, generally speaking, what will the mix be on the book? There's MFI, there's retail, and now you're building corporate. So just give us some sense in terms of strategy for the next 1 year.
So just to be clear, I'm happy you drilled deeper on that. There's no swing of strategy that suddenly we're going to go corporate. So let me clarify that. So thank you for asking. We have 3 businesses, what we call traditionally known as RAM in the industry. There's retail, agri, MSME. I told you the numbers; they're all, you know, rock stable. And let me just tell you the specific numbers of retail NPA. Retail NPA is 9.63% gross, 0.59 net, and SME is only 0.82%, even less than 1%. So we're quite happy with that. But incrementally, we're also doing corporate. Like, let me think of a growth of like 20% or so, or 23, 24%, because that book is also a good book. End of the day, we are a universal bank. We are not only a retail bank. We're a universal bank. We have trade, FX, we have salary accounts. That's also an important part of it.
Mr. Vaidyanathan, I think Surabhi's question is not that. Will you be upping the ante more on corporate loans? So if your margin is 6.04, should we be prepared for 6 or sub 6? That's the point.
Okay. I'll answer that specifically. So it's not, let me answer that. It's not like a dramatic swing happening towards corporate. We just like to grow it just almost in line with the retail book now. We don't want to swing more towards retail, etc. It's already doing
that's
well.
a fair point. But what is your margin guidance?
20%. First of all, we'll expect retail grow by 20%, wholesale by 20%, blend, you know, something like that. Now to your margin thing, we think that roughly around the 6-ish odd % we should be able to sustain in the longer run. You know, next year, of course, is because base effect of MFI will not be there. So income growth of the bank will, you know, traditionally income growth has been like 20% and all. Maybe it will come down a little lesser. But the important thing, OPEX also will come down. So we believe that the next year is a transient year. And then after that, the next 4-5 years, we see a one-way track. So a short question on NIM as such, we expect some stability from here.
Okay.
All right. Mr. Vaidyanathan, it's a pleasure, sir. Thank you very much for joining us and sort of patiently running us through all of the numbers. And we wish you the best of luck as you go forward, and look forward to our next chat. Well, let's just look at the market for a quick bit. We are down 120 points, 22,970 is where we are trading at. So there is a recovery, but it's kind of, I mean, so many mid caps, small caps, etc. have seen crunching falls in 30, 40%, 50% in some cases. And it's all kind of sort of under the surface, even as the Nifty at a percentage level is down about 10, 12% or so.
or from the highs. Now, real estate, of course, has been a big driver, right? I mean, 30, 40%
Real estate has done well, stock markets have done well, and kind of both have fed into each other. Macrotech Developers is, of course, the leading company out of the city of Mumbai, and we have the management with us. Now, they continue to deliver on that 20% sales growth target, so no problems there. Abhishek Lodha is with us, Managing Director and CEO at Macrotech Developers. Abhishek, good morning. Great to have you with us here. Thank you for your time. Prashant this side. You know, we'll before I get to the numbers, if you allow me, let me start with some of the news flow, which, of course, I think a lot of the investors would like you to address as well, which is this case in the High Court, which has been filed against the house of Abhinandan Lodha, and this is a brand dispute, Lodha brand name dispute. Could you just outline, what this is about and what has happened? What's your thinking and what's your position really, Abhishek? Go on.
Hi, Prashant. Good morning, and thank you for allowing me to be with you today. The dispute, let me first set some context. Abhinandan Lodha is my younger brother. He is someone who I wish and have always wished the very best for. And I hope he continues to be successful in whatever he wants to do, including if he wants to do real estate. So that will, set the context of where I am as an individual, as a person. All the mudslinging and other usage of the media is very painful, and our family will not be part of that kind of an effort. It's a simple dispute in relation to the very valuable brand that we at Lodha and Macrotech have built up over 40 years with thousands of crores of investment and tremendous goodwill in terms of our pedigree, projects, as well as the integrity in which we operate. This dispute is not dissimilar from the recent dispute between Indigo and Mahindra when it came to the usage of the term 6E, which is not even Indigo's primary name, but probably something less than that. So I think the courts will take their own view. I reiterate that I have no desire or in any manner to do dirty washing of linen in public. For the last 10 years, I have kept everything private. The company has been through big downs, and now it is doing well because of the efforts of 5,000 Lodha associates who work day and night to make this company successful. And we let the legal system of the country decide who should be very clearly using the Lodha brand and why the consumer ought not to be confused that any other developer using anything which is similar to Lodha is allowed to operate in the marketplace.
Okay. No, and you've explained it very well. And absolutely, you've kind of sort of, you've been down, you've come up, and of course now you've been doing very well for the last many years. So, the brand is, of course, all out there for everyone to see. Abhishek, two or 3 points. It's at the end of the day, some will argue it's the family name, right? When you gave the example of Mahindra and Indigo, but this is, this is the family name. So when as part of the family agreement, right, was there was a non-compete, which of course finished, etc. Was there anything in the family agreement which makes this clear that, Abhinandan cannot use that brand?
Prashant, I would let the legal process take the view, but I can directly answer your question, and I hope we'll move on to the company's performance, which is far more interesting and valuable to discuss. But I can tell you in no unclear terms that the family agreement explicitly stated, and that time we were a private company. It was well before we became a listed company. It explicitly stated that all brand, IPR, trademark, copyrights of the group will exclusively and solely belong to Lodha Developers or Macrotech as it is known now. And Abhinandan or any new business that he starts cannot use, and I emphasize these words, cannot use the same in any manner whatsoever. But I think we should end this discussion because the courts will take their own course. This will take a few months or years to finalize. Let's move on to the company and its performance if we can.
No, absolutely. And I just wanted to address that right at the outset. Let's get to the numbers now. Nigel.
Well, Abhishek, all I want to tell you all is hoping for a smooth resolution, and, we'll wait to hear from you on that. But enough said about that issue. Let's focus on your numbers. Now, your pre-sales guidance, I think, for the year was around 17,500 crores. You've achieved close to around 73% of that. So for the year, do you want to outshine what you had given us earlier, or do you think you'll end at around 17,500 crores? And also comment about this perceived slowdown. Are you experiencing it?
So our numbers for Q3, this was our best ever quarter in terms of sales, our best ever quarter in terms of collections. We came in with sales of over 4,500 crores. And at this point, we are very confident about meeting our guidance for the full year. You would also note the strong underlying profitability. Earlier at the start of the year, we guided to an embedded EBITDA margin of 30%, which is now approaching 35%. You'd look at our debt reduction in spite of very significant investments in new land and business development. Our debt has reduced by almost 15% this quarter, and we are now at a debt equity of 0.22, well below our ceiling of 0.5. So all in all, there is a very strong underlying momentum in the business. We like this predictable business. We don't like to have choppiness in our sales or in our progress. And that's driven by having a very granular, diversified business, which is spread across 40 operating projects. No one project contributes more than 15% of our sales. And that's what allows us to have consistency in our performance. I have read with some interest the various media reports speculating on whether there is a real estate slowdown on the way. All I can say is that the real estate is part of the larger macro economy. And if there will be an urban slowdown, then eventually there will be sooner or later some impact on housing and real estate. Having said that, I think real estate is in the midst of a very long 15-year cycle. We are only in year 4. And as I've said in the past, there may be 6 months which are not a straight line, and that's par for course. But if I look at the fact that today what's most important for the consumer is the brand they are buying from, and the supply from the big brands in the country will never be able to meet the demand, and there will always be a big supply-demand gap.
Abhishek, and glad you said that. And you called it out early in that sense, that long cycle, and hope it plays out because it's so integral to many other parts of the economy. But at the margin, even cyclical, in terms of the cyclical, a few quarters, not straight line, as you described it, could you tell us where is this showing up? Because you'll get straight up signs, right, before anyone else. This slight urban slowdown. Which segments is it showing up sharply?
Prashant, we haven't seen the slowdown. When I refer to the urban slowdown, I refer to all the news reports about FMCG sales in urban areas being slower than expected and so on. So we haven't yet seen it. You'd have to recognize the fact that the housing consumer is not really the full urban consumer base. It's the upper end of that urban consumer base. And we see that continues to remain quite robust and strong. But all I'm trying to say is that, ultimately housing is a big contributor to the economic growth, and it's also a big beneficiary of economic growth. So it can't remain unrelated forever.
Abhishek, just finally, you've mentioned that, the market is still booming. Leave us with an outlook on pricing, specifically in, some of the key pockets, like the MMR region where you operate. In general, say over the next 4 quarters odd, by how much would you say pricing can appreciate?
We've maintained this consistently, that pricing growth should be below wage growth. We've delivered that consistently since our IPO. And I think that's what's leading to the sustained strength in our business, that we've not chased pricing when, we could have taken bigger pricing increases. Our expectation for the next fiscal year, fiscal 26, is that price growth in other markets that we operate, which includes the Mumbai region, will be in the range of about 5 to 7%. And that will be about 200 to 300 basis points below wage growth, which means that affordability will get even better. And yet those who have already bought homes will experience the, inflation or slightly above inflation growth in values.
All right, we'll leave it there, Abhishek. Thank you very much for joining us and sort of explaining all of that and sort of running us through what you make of the market situation right now. Appreciate it. Well, we'll take a quick commercial break here. Market's down about 100, so just under 22,300 in the Nifty. We'll talk commodities and what's top of mind there. Manisha comes up on the other side.
Welcome back. The risk-off in global markets is still continuing, though we've managed to recover a little bit. But just pointing out that U.S. futures are down anywhere between 1% to 2% on the Nasdaq. So let's watch for what happens. Let's find out what's the latest in the commodity markets, given all the headlines around tariffs and Mr. Donald Trump. Let's go across to Manisha for the latest. Manisha, morning.
Morning, and thank you for that. Well, I'm looking at the crude oil prices, which are trading nearly a percentage point on the lower side in the Asian markets. This is after crude put a weekly decline of 3% in the previous one, and this actually has been the biggest decline since the month of November. January so far, though, has been positive, up 3.5% right now. But I also want to take you through the highs and lows that we already have created for the month of January. So when you look at the WTI prices, we've seen a low of 72 and a high of 79. That's how we saw the prices trade in the mid-January there. And currently, we're trading at around 74. For the Brent as well, we've seen a range of 82 to 75, and we're trading at 77 right now. So somewhere in the middle of the range or on the lower side is how the crude has been. And as you can see, it has been nearly $6 to $7 of a range already coming in for the crude oil prices. There have been various reasons for this recent decline. One, the U.S. has been asking OPEC to reduce prices. U.S. also, in any case, OPEC is increasing production from the month of April after that recent postponement. But U.S. also has announced to boost U.S. oil and gas output as well. The markets also are looking at the U.S. imposing retaliatory measures at Colombia. As of now, the kind of imports that U.S. does, nearly 41% of Colombia exports actually come into U.S. I mean, not a very strong number, but then U.S. is an important market for Colombia. And with the way that we are looking at tariffs moving, this would mean higher crude prices. But that really doesn't seem to be a concern right now. That is because the U.S. oil output itself is on the higher side. When you look at 2024, we hit an all-time high of 13.2 million barrels per day. Now, this year, the expectation is that U.S. will be producing record highs to the tune of 13.6 million barrels per day. So clearly weighing onto the markets there. The other thing is about the U.S. oil and gas rigs, which have continued to decline. But that doesn't seem to be supporting markets right now because the acreage is increasing. As per the Baker Hughes report, in 2024, you saw the rig count decline by 5%, which was down by 20% in 2023. And this year, until now, we are down by almost 7%. But this is still early days, and the markets will want to watch out for further numbers there. Russian sanctions is another thing that you need to keep an eye on. This does impact India as well. So while Indian Russian oil tankers, the clarity says that until Feb 27, the discharge can happen. The second important point is that India will continue to buy Russian oil until the prices are sub $60, and the freight and logistics is not sanctioned by UN or US for that matter. Importantly, when you look at the Indian imports from Russia, pre-Ukraine war, it was just about 0.2% of our total imports. As of now, it stands at a big 33%. So clearly, slightly disrupting for the Indian markets as well. This week is going to be important because you have monetary policy meetings from not just US, but Canada and European central banks as well. And then, of course, the Indian annual budget as well. So going to be quite a volatile week in that sense. But some more decline is what you can anticipate when it comes to crude.
All right, Manisha, thank you very much for that. So that's oil prices in focus. But Lata's with us. It's the economy. Lata.
Thanks a lot. It's actually corporate earnings continuing, and Shriram Finance is the next management on the show. The problem was only with the net interest margin, which has come in lower, a 6-quarter low. AUM growth is actually better than estimates, and asset quality very sound. To discuss these and more, I have with me Umesh Revankar, Executive Vice Chairman, Shriram Finance. Mr. Revankar, good morning. Thank you very much indeed for joining us. Well, give us the overall growth prospect. It is encouraging that you have been able to grow your, AUM at 19% despite commercial vehicles not doing well. What's the kind of, pace of growth you are expecting in the coming quarters?
Yeah, good morning, Lata. Basically, if you look at last quarter, there has been very good demand coming from the rural market, especially if you say the sale of two-wheeler and the tractor. The demand has been quite strong. And for us, even for commercial vehicle, demand from the rural market has been very strong in the last quarter. And the basically the Kharif crop has been good, output has been good, plus Rabi crop expectation is good. I think rural will remain strong going forward, even this fourth quarter. And there will be some demand coming back from the urban as well, mainly because I believe the infrastructure projects have been announced in the last 2 months. There are a lot of, at least a lot of commitment, movement, demand, inquiries coming into for commercial vehicles. So I feel...
Okay, no, Mr. Revankar, you know, Mr. Revankar, if I looked at your entire mix that you put up, your commercial vehicle sales have grown by only 12.5% year on year. But passenger vehicles, of course, it's a smaller base, but that's grown 25%. Farm equipment has done very well, 42%, MSME 50%. But commercial vehicle and construction equipment, the two things linked to infrastructure, are in very low double digit. I mean, 10% on construction equipment and 13% on commercial vehicle. Will these two numbers be better in Q4? And if yes, approximately how much better?
No, it will definitely better. It will not jump big. I think it will be around 15%. It will not, because the base is very big. And the demand for passenger vehicle is something which continues to be very strong. And I think it will continue to grow well.
Okay. So you think your overall AUM, I think in your con call, I heard you said mid-teens. You've done 19%. Can't you do 19% again for the full year and for next year?
We would like to always grow faster than or bigger than what we have announced as a guidance. But market dynamics, we need to keep watching. I feel definitely the growth prospect is good in the fourth quarter, and generally fourth quarter is large.
Yeah, but since you said mid-teens, I'm asking whether you are therefore discounting some slowdown in the market, slowdown in demand.
No, I'm not discounting a slowdown, but there is a demand. I think demand has come back. Even the construction equipment demand is reasonably bounced back, I should say.
Okay. So you may do better than mid-teens. Is that right?
Yeah, you're right.
Okay. Let me come to the margins. Net interest margins at 8.48 versus almost 9% year ago and 8.74 quarter ago. So that's a big fall. I mean, over a 25 basis point fall in one quarter. Do you see that pressure continuing?
Yeah, see, one of the reasons is we are carrying a little higher liquidity on the balance sheet, mainly because... see, last quarter, the general expectation was that liquidity is tight and we will have little more liquidity in this system. So that's where we worked on the same and had a higher liquidity. And we also had for the one-time big the ECS loans, which we had a program. Normally we program in the month of January. But we had it in the month of December as a strategy. And therefore, we had that excess liquidity. And we should be able to consume that in the fourth quarter. So that to some extent, the NIM expansion would happen.
That's what I was going to ask you. If you will use up that excess liquidity that you are carrying, should we expect NIMs to go up in the fourth quarter, above 8.5?
Yes, it should go up.
Okay. Generally, what is the cost of funds? Has it started at least plateauing? I mean, it's not declining yet, but any guess on what may be the cost of funds in Q4 compared to what you paid in Q3?
In the Q3 to Q2, it was almost plateau and did not really go up. Q4 also should remain same. I don't really see any scope to increase, and there may not be any sign of decreasing in the Q4.
Okay. Where do you see the big growth numbers for next year, FY26?
No, I think the infra is going to bounce back very strongly because the government did spend lesser in the last year, throughout the last year. And that pile-up would be there, and that will create much bigger demand. And that, again, once there is a spent on the infra increases, the other allied industry also will move up. And I think that is the major driver we see going forward, especially in 26.
Okay. The construction equipment and commercial vehicles.
Yes, both. Because
commercial vehicles.
ultimately it's a steel cement movement. They are the bulk of the carrying. Once that bounce back, then entire system will churn.
So you're counting on government capex to come back, and therefore commercial vehicle and construction equipment should do well.
Yes.
Is that right?
Yeah, you're right.
Okay. And spreads, or rather net interest margins, can you give us a more precise range for Q4? After all, we are already 1 month into Q4.
Yeah, see, I cannot really predict, but I can tell you that around 10 basis point improvement is something which we see because of the using of liquidity. Beyond that, because what happens is the product mix may change even within the quarter. There may be a little more new vehicle lending, especially on heavy commercial vehicle demand. If that happens, then the margin can be a little less. So it is little difficult to predict exactly, but the liquidity being utilized is something certain.
Which will give you 10 basis points, point taken. You've maintained a very good asset quality control. Are you expecting that you will be able to continue? Do you see, other NBFCs which have personal loans and unsecured loans have had a problem? You don't see any such problem with your personal loan book?
See, our personal loan book is basically our existing customer taking a top-up loan after completing the primary loan. So it is basically no known customer. We are not really giving to unknown customer. Plus, their income source is known to us, and the investment for which they need the money is also known to us. It is not going for consumption. So therefore, there is a much better clarity from our side on where the money is going to spend. So
fair point.
There is a less chances of much increase in default.
Okay. Okay, no, I get your point. Take your point that you have been able to diversify very well when commercial vehicles didn't do well or didn't do all that well. Just a final word. If you say better than mid-teens, will it be 20% loan growth next year?
For next financial year, I don't want to really give a number, but I would like to continue with our conservative 15% growth plan.
Okay, one more number. Your ROA was a disappointment. Do you see that bottoming out in the third quarter?
Yes, it should bottom out and improve in the next quarter.
Okay. All right. We'll leave it at that. Mr. Revankar, thank you very much indeed for joining us, and congratulations on a very good set of numbers. No taking away from the credit of asset quality and loan growth. Yes, margins we will squabble a bit, but as Mr. Revankar pointed out, they have excess liquidity on their balance sheet, and that would increase their NIMs by at least 10 basis points going into Q4. Well, the markets are still a little downbeat. The only market that's actually very happy at this point in time is the Indian bond market, because on Friday, the Reserve Bank went and bought 10,000 crore of bonds. So barring that, all other markets a bit downbeat. We'll wrap up on Bazaar on that note. Chartbusters coming.